That high probability trend trade, guys, that's the one that creates a lot of confidence. And most importantly, it's the one that teaches you to read your indicators, guys. That's kind of, whoops, what we're doing today is we are, let me get my slideshow going. Man, I messed up. We're going to learn to read indicators today. That's really my whole goal each and every day is to be able to look at a chart and really to say to myself, hey, I have what I need to enter the market. I have the advantages in play that give me an edge. It's just a pattern that's been proven to win more than it loses. And when that pattern is true, I'll enter the market. And when that pattern is not true, I will choose to not enter the market. And it's almost too simple, right? What you're going to find, and most people don't care for this part of day trading, is that you're going to spend most of your day not in a trade. You're going to spend a lot of time waiting for the perfect setup, waiting for the advantages to be there, waiting for your edge, waiting for your pattern to present. 10% of your day will be actively trading, actually getting in and out of the market, managing trades, all of that fun stuff. But if you take the time to learn a couple advantages, to look at your charts, and to say, hey, I have the advantage of this, I have the advantage of that, I have what I need in order to enter the market, then what you'll be able to do is you will be able to understand where the market is likely to continue. You'll be able to understand where the market is likely to go. You'll be able to understand where the market is likely to stop. And you're going to use these three concepts. You're going to use these three concepts for entry, for exit, for management. And guys, that's what's gonna keep you in the market, out of the market, is that simple chart reading, just that very basic getting in and understanding what you're looking at. Sorry, I'm rambling a little bit. I had something pop up on my screen that I had to unpop. The high probability trend trade is 3 rules deep, guys. That's it. It is 3 rules. Each rule, when true, creates an advantage. When you have 3 advantages, it's time to go. It's time to take advantage and to get into that market, guys. Your first rule, strong triggers, is going to provide you the advantage of momentum. And anytime we talk about having strong triggers, anytime we talk about the advantage of momentum, we're talking about a market where the odds are favorable for it to push and continue in an already established trend. Rule number 2 says no termination conditions. You need to have room to your profit targets. Makes sense. Anytime rule number 2 is met, you're going to be able to say to yourself, I have a clear path. So when you couple momentum, which is a market that is just pushing and screaming in the direction of the trend, hard to stop, and you put nothing in its way, guys, you have the basis for greatness. You have the core that we're going to talk about this morning. This is the one that as soon as you understand momentum, as soon as you can couple it with a clear path, you have everything you need to create a very consistent, profitable trading plan. Your third rule is the entry rule. It's the entry for the high probability trend trade, putting you in where the market is most likely to continue. And guys, this third rule is specific to the trend trade. This third rule is going to help you understand stop placement. It's going to help you with management. Good morning, Cav. You be listening today on the road? Right on. Drive safe. This third rule is just the first of many entry opportunities that you're going to find when you have momentum and path. So these 3 rules, 3 advantages, happen on only 2 charts. There's a large chart. This leads the way. The large chart is always first. It's a very slow moving chart. It's a broad stroke of a brush, if you will. And it takes this one bar, the most current bar on a large chart, to define the direction of the market, letting you know the trend, which way you should be looking for entry rules to be met. It'll define the momentum in the market, letting you know you have that first advantage from rule number 1. And it'll define the areas that could be problematic, those potentially likely to stop the market areas. And that's going to come in and make sure that rule number 2 is in play. So rules 1 and 2 have got to be met on that large chart, and when they are, you'll go to a small chart. This is your entry chart. And the small chart refines the big picture. It pinpoints entries with rule number 3, and this creates smaller risk and larger profit potential. So inside of this one bar, defining direction, momentum, and areas, are all of these bars. And that's that refinement process that makes this high probability trend trade entry so accurate. We use these two charts, and I like you to think of them in terms of who am I trading with and who am I trading against. Your large chart, think of them as a large crowd. These are the men and women with the money and the influence. They can push a market, they react at key areas, they can ruin your day if you decide to fight them. Large crowd typically wins. That's why we let the large chart lead the way. Your small chart is the small crowd, and these are the men and women that still have a lot of fight in them and the money to support it. And they create these little ripples, these pushbacks, retracements in the market, these dips, whatever you want to call them. But they typically fail in their fighting efforts 70 to 80% of the time. So on that smaller, faster chart, rule number 3 has you pinpointing precisely where their failure is most likely to happen, which also happens to be the place where the market is most likely to bounce and continue with the large crowd's trends. So 2 charts, think about who you're trading with or against. And then we're going to learn some rules. The first hour guide, it's dedicated to the same thing we talk about every day. 3 advantages, being able to look at them, learning the trigger line and Fibonacci rules for when it's okay to trade, and then starting that commitment to trading when the rules are true and being willing to not trade when they're not true. Typically what sets apart the most successful traders from the ones that find themselves struggling is the ability to do nothing, which seems like a crazy skill to need. But to be able to sit still, to not enter the market on hope, but rather enter it because of advantages. Everybody in the room has the ability to simulate, to get on, to not risk real money. Your simulator is the batting cages or the driving range, guys. There is no fear of actual capital loss on simulator. You also have the ability to post in the room. That's the first step in becoming a confident trader ASAP. I love the ASAP. Every time you post in my room, you're opening the door for a private session. So if you post in my room, I'm going to go back, I'm going to look at your charts, and I'm going to talk about these 3 rules. I'm going to talk about momentum, I'm going to talk about the path, and I'm going to talk about the entry that you took. I won't judge you. I won't say that's the wrong trade for you guys. Trading is an individual sport. But what I'm going to do, because this is a teaching room, is I'm going to go back to these 3 advantages. We're going to talk about them. We're going to do the chart read. My first goal is to make sure that you understand these 3 concepts, that you can identify momentum correctly, that you can identify path, and that you can tell me why you entered and where you entered. And what's going to happen is every time you post in the room, you're going to talk about those 3 things on the chart. You're going to say, hey, Mark, here was my momentum. We're going to make sure the read was accurate. Mark, I had a clear path. We're going to make sure that you use the correct rules to define it. And then when we look at your entries and exits, guys, good morning, Miss Cindy. It gives me the opportunity to say, hey, here's where you could have had a little less risk. This is where maybe you could have held a little bit longer. So whether you're working on learning the entries, whether you're working on building a management plan, and even if you're looking to create a new trade for your trading plan, guys, every time you drop it in the room, I'm going to give you everything rattling around my brain to help you do it better, to read it better, or sometimes I'm just going to high-five you because it's such an amazing job that you did. The goal is that you always have the correct rules, whether they are the rules on the plan that I'm giving you or whether they are your rules that have been proven to win more than they lose. Write your rules on the chart. I encourage new users to do this. Write those 3 rules on the chart every trade you take and write either yes or no. Did I have strong triggers? Was that path clear? The goal is that you're not practicing the wrong trades. Very often on simulator, new users just go rogue, willy-nilly, and they get lucky. And yeah, they fight everything, and their simulator money grows. and they're like, oh my gosh, I must be amazing. And they go live and their luck runs out. So it's a short-term victory, guys, huge dopamine kick. But um, entering with an edge, with an advantage, typically produces the long-term results that we're looking for. So practice, post, guys. You can't post too much. Ask all of your questions. We will simplify, same way we do every day. Um, you need to know what looks you're going to commit to. I like to say, guys, a high probability trend trade, and really any trade you take, should just be a pattern that repeats itself. That pattern needs to be testable. You need to be able to verify it. You need to make sure that it does actually win more than it loses. So I'm going to have you a plan that uses that pattern, that high probability trend trade pattern, um, and you need to learn the pattern, what looks you're going to commit to, those three advantages. And when you learn them, they become easy. And that's where we're going to embrace the idea that repetition creates recognition, guys. And that's the second piece of the puzzle in becoming a confident trader. Use the spreadsheet that I'm going to give you. I'm going to give it to you right now. I give it out every day. I typically update it a couple times a week. Really because you guys are always posting great stuff in the room, and I steal it and turn it into a study guide here. I just dropped it in the room for you. This spreadsheet has 4 tabs. The first tab is the basic rules. It is strong triggers, clear path, and entry. All in green, letting you know what it looks like to have the individual rule met. Each picture has been annotated. There's an arrow pointing to strong triggers. There's a description creating that correlation between the eyes and the brain of what those strong triggers look like and mean to you. And then there's also the red section, is what it looks like when the rules aren't met. And this one I think is almost just as important, if not more important, knowing when it is better to sit on your hands and do nothing, knowing when the edge isn't there, when the advantage isn't there, when you are trading hope rather than a plan. So I'm going to give you a little something to help you fill that out on your own, just a little tool to make you a better chart reader quicker and more effectively. The second page, whoops, all that green section, guys, that's like 400 pictures of you guys doing great things with the software, client trades, the recognizing the patterns. And guys, we had an awesome moment yesterday where a gentleman posted in the room, and it was the perfect setup. It was every advantage. It was an ideal entry, and the trade didn't work. And guys, I think that because we're focused on patterns, not results, you're going to find the perfect high probability trend trade pattern in here that doesn't work, because anything that wins 70 to 80% of the time, it is obligated to lose 20 to 30% of the time. It's a part of trading, guys. It's a normal part of trading. So use this green section. Go back, study patterns. There is the actual small chart entry sequence outlined for you. How to do it all the way from beginning to end. There is management, and then a more broad stroke of the brush on management for as you grow and read your indicators. You will begin to see patterns in the market. As you begin to recognize momentum and clear path and they become easy to you, your brain's not going to work so hard on those, and it's going to start seeing other things, guys. Take pictures of them. Maybe you'll incorporate them into management. Maybe you'll incorporate them into reasons not to trade, reasons to take trades. And please feel free to share in the room all the patterns that you see. We can talk about them. The third tab is your trading plan. You should have a written plan. One of the things that the CME tells you is, and I love this, there's no such thing. There is no such thing as a mental plan. Plans are written, plans are living documents. They may change, but you need to know why you're getting in and why you're getting out, what that pattern looks like. So this is a place for you to put all those pictures of what it looks like to have your rules met, ways you're going to manage it, and a place for your patterns as well. And then finally, there's the trade tracking sheet. This is where every time you take a trade, if you enter and exit the market, I don't want you to be so worried about the result as a brand new user. And I know that's easy for me to say because nobody likes to lose. But guys, some of the best lessons you're ever going to take are going to come from your losers. If you'll just post them in the room and let me help you with your read and your execution. So there is, under the picture section, how to annotate for the best feedback, how to post it in the spreadsheet. There's a little reminder there, momentum and clear path. Were those present? You're going to find that you're going to see a lot more winners when you can mark yes to those than if you're putting no. And then finally, there's the feedback from class. And this is just me saying, hey, I see what you did. I see how you read your charts. Here's a way to identify momentum because you made a mistake there. Or great chart read. Or you're trading in determination conditions and it's costing you money. Or you're jumping in too soon. Or whatever the feedback is, you're going to see it. And you should write it down because sometimes I say some smart stuff. But the best use of that final tab is to wake up the next morning and look at the trades that you took yesterday and ask yourself what worked and ask yourself what didn't work. And what you're going to do is you're going to start to see the patterns in the market that are bringing you success. And you're going to see the patterns in the market that are taking that success. And I think most importantly, you're going to begin to recognize the patterns in yourself that are bringing in and taking success. Very often, when you're looking at your spreadsheet the next morning, if you're honest and you accept the feedback, you're going to see the things that are causing problems. Trading in determination conditions was my thing as a brand new user. I couldn't stop trading in areas that could stop the market. I don't know what was wrong with me, and it took me a while to fix it. But what my brother did, because he taught the room back then, is he would look at my charts and he would say, hey, your read is great here, this is right here, but I want you to see this, and this is what keeps getting you, and here's how you avoid it. And the feedback gave me a plan to start eliminating and recognizing the things that were taking success from me. So this brief historical morning, each and every day, guys, it's going to accelerate the learning, it's going to prepare you for the day. Take advantage of having that spreadsheet, fill it out, go back and study it. Our first hour, my promise every day is that I'm going to give you everything that you need to be successful with the software. We're going to give you the rules. We're going to break them down individually. You'll be given a way and a place to study them. I'm going to hand you a plan that only has 2 trades on it. And the first trade, of course, is the high probability trend trade. The second trade is what we call a medium probability trend trade. And let me tell you the difference between the two. A high probability trend trade means each rule on every chart agrees with the rules for the trade. This is the best of the best. This is the strongest triggers and nothing in the way and nothing between you and your targets. A medium probability trend trade means that you look at your charts, you analyze your advantages, and one of these advantages is missing. Maybe you're lacking momentum, but your path is clear and you have a great entry area. And what you're going to say is, I'm willing to take this trend trade, but because it's not perfect, I'm going to have to manage it a little more assertively. And the second trade on your plan revolves around not having a clear path. So by the end of the first hour, or at least the first session before break, you will have everything that you need to be successful with this software. The only thing Nexgen doesn't provide is the desire to study. The only thing we don't give you is the experience for it to become easy. So the more you do, the more you're going to get out of this software. And we're going to get going. We're going to talk about rules. We're going to talk about strong triggers first, guys, because strong triggers give the advantage of momentum. Momentum is hard to stop. The only way to have strong trigger lines is to be trading with the trend. So if your trend is up, the background is green. If your trend is down, the background is red. The only way rule number 1 can be true is if in an uptrend, both small and large triggers are green. In a downtrend, both small and large triggers are red. If they are not, you don't have strong triggers. In an uptrend, strong triggers means that your small triggers, the faster moving average, it's 2 solid lines, have broken away from and gone above your large triggers, the dashed line, the slower moving average. Smalls above the large, and then it's the space that's created between the two. I want you to picture scissors that have just opened up. And guys, when the scissors are open, you can cut, you can get work done, or as Jerry says, they can cut you a check. Same is true in a downtrend. The smalls will get below the large. It's the space that's created between the small and large triggers, guys. There has to be a gap there. That gap lets you know that the odds are favorable for the market to continue in the direction of the trend. You're going to hear odds favorable momentum in the room all day long. Odds favorable momentum pushes a market, guys. Odds favorable momentum can break key areas. You're gonna rely on it for that second trade where the path isn't quite clear. Odds favorable momentum can even cover some of the mistakes that we make as new users. But momentum doesn't last forever, guys. Eventually, that separation closes. That gap closes. The smalls work their way inside of the large. When the smalls are inside of the large, you have weak triggers. When you have weak triggers, anything can happen up or down. So this is where the market can retrace from the middle of nowhere. This is when key Fibonacci areas tend to hold, tend to create bounces. So as a brand new user, I'm going to encourage you, focus on strength of momentum. Focus on those strong trigger lines. And when anything can happen, understand you're flipping a coin. It's a crapshoot. There's only one look that gives me the confidence I'm looking for to enter a trade. And that one look doesn't happen all the time, but when it does, this is when you're taking advantage, guys. So strong triggers has nothing to do with the price bars. Strong triggers has nothing to do with Fibonacci areas. Strong triggers are triggers. Triggers are not trend. So if there's a separation, the scissors are open, guys. There's your advantage all the way down until they return, and then you have weak, and that is where the retracement comes from. So strength and weakness. Notice that 1, 2, 3, 4 pivots happen with weakness, guys. Big pushes happen with strength. And let's see if we can find an example of it in a real market. This is the S&P, guys. A lot of lines on that chart stopping the market, isn't there? Smalls below the large, space is open, strength. Smalls return, holds right at a key area. Separation pushes up, separation pushes down, and the colors don't match right here. Does everybody see that? Smalls are up, larger down, smalls are up, background's red, triggers green. Guys, you can't have strong triggers, and what you're seeing is a market that's consolidating. You're seeing a market that's chopping. And if you have any time in the markets, you know that consolidation can drain an account quickly. If you just adhere to the idea, I have to have rule number 1 met, it's going to help you avoid moments like that. So that's rule number 1. Is everyone good with that? Don't ever be shy about giving me a why in the room if you are. Don't be afraid to put an N. Hey, Mark, I need you to talk about it for a little bit longer because I always will if you need me to. Once I have momentum, we're going to make sure there's no termination conditions, guys. No areas that can stop the market because we want room to our profit targets. Again, termination conditions. This is a large chart rule, and termination conditions are Fibonacci indicators that can stop the forward progress of the market, that can create a reversal, that can create an untradeable bounce. I like to think of it as they're horizontal lines on the large chart where the large crowd might make decisions. You can use magenta highs. It's a magenta line. It prints off of a pivot if there was a loss of momentum. That's exactly what divergence is. Divergence is a loss of momentum in the market. You'll see it as a cyan line if it happens at a low pivot. You're going to see Fibonacci resistance. You're going to see Fibonacci support, yellow 1-to-1s, and even a mid-band. All of these areas are capable of stopping forward progress. There's a very simple recipe to identify a termination condition. And it starts with the understanding that these lines on a large chart are where decisions are most likely to be made. So you're going to let price get to the lines. That sets off the decision-making process. So if the market's pushing up and it reaches resistance, if the market's pushing down and it reaches support, you've reached the area, and now the trigger lines, not price, will tell you the story. So if I reach resistance, I'm going to ask, where are my triggers? If my triggers remain below resistance, resistance is a termination condition. Resistance has a couple options. It could reverse the market. It could create a big ugly bounce that could take me out of a position if I try to trade into it, or it might break. And the reality is I never know what's going to happen. So rule number 2 says you don't know what's going to happen. No trades into the area. Price pushes down, reaches Fibonacci support. I ask myself once again, where are my triggers? Well, they're all above support. Support is a termination condition. There could be a bounce, a fight, a break. I never know. But rule number 2 says it's a termination condition. Absolutely no trades into the area. And that's what it'll look like in the moment in a live market on that first bar. Price reaches Fibonacci resistance. I ask myself, where are my triggers? My triggers are below resistance. Absolutely no trades into the area. And what you're going to find is that rule number 2 became a rule, not because we're trying to keep you out of the market, but because more often than not, this is a pretty outstanding example. Textbook, even with momentum, creates a loser. Textbook termination, once again, there it is there it is there. Guys, more often than not, you're giving away your advantage, you're giving away your edge if you trade into these areas. So wait for the clear path. That's the easiest thing to do. And a clear path just means that your trigger lines are no longer at the point of trouble. So over here, when price reaches resistance and the triggers are below, this is your sit on your hands and do nothing phase. Once your small triggers and your large triggers get above the area in question or below the area in question, guys, that's when we consider the path to be clear. Not price bars breaking, but rather trigger lines, small and large. Once you have a clear path, your path remains clear until you reach the next area. So this is going to be your patience piece, waiting to see what the reaction is going to be. Sometimes it's a break. We call this a breakout. You'll look for opportunities to continue going long. Other times you'll reach a termination condition. It'll reverse the market. But you'll notice that after the reversal, you have momentum and price didn't reach support yet. Guys, this is your clear path, and that path remains clear until the next area, and that's going to come from a reversal. So you'll either get it from an area breaking, Fibonacci breaking, or from Fibonacci holding and reversing, guys. Once you have the clear path, if you're coupling it with momentum, this is the easiest trades you'll ever take. This is the easiest money you'll ever make, because with strong triggers and absolutely nothing in the way, these tails on a large chart, these are where that small crowd, where that small chart retraced, bounced, and continued, where it retraced, bounced, and continued. This is your high probability trend trade. And guys, this is the effortless. This is the quick money. This is the easy money. This is the highest probability money. When rules 1 and 2 are met, you will find a way to capitalize. You'll be able to study high probability trend trades by seeking these tails out when those rules are met, circling them, and looking to see if your entry rules are met. Is everybody good with that? Large chart termination conditions. Let it either be a termination or let it be a clear path. This is the easiest route for brand new users. There is one small chart termination condition, and it uses those divergences, those loss of momentums. And 3 divergences in the same price range could terminate a trend. 3 losses of momentum on a small chart is showing you the change that you can't see on a large chart. 3 divergences over here, even with odds favorable momentum over here, says, hey, we're putting up a fight, things may change. It's a termination condition, and it's actually the only reason that I won't take an entry on the high probability trend trade if I have momentum and path on the large chart. This will help you see a market that seems to be reversing from the middle of nowhere. But if it's not there, it's time to go find an entry, guys. Entries are precise. Entries are very specific. And you're going to use a limit order. You're going to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback, that fight from the small crowd. And you're going to buy or sell that pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1. Because the same way those areas could stop the overall trend, they can stop that short little retracement, create a bounce to go in the direction of the trend. But we want those lines to be inside of triggers, guys. Triggers do amazing things. Triggers, large and synthetic, on your small chart, um, these show you where the market's most likely to retrace, where that push up is most likely to go. Uh, and it's this refinement process. The reversal bar begins the pullback, and that's at the very bottom of this first bar. And that pullback goes right to an area inside of triggers. That's your rules. And then it continues down. So all of this push up and this push down happens inside of that one bar where the advantages never blink. Guys, this refinement process is going to allow you to reduce risk. It's going to allow you to maximize profit potential. So you've got to learn the little recipe for identifying the point where the market is most likely to continue. And it begins with the rules met on the large chart. So in this particular entry, the large chart would have a red background, it would have strong triggers, and it would have absolutely nothing in the way. And while this market is screaming down and I'm fearful that it's going without me, I'm waiting for the first step in the pattern, which is a reversal bar. This reversal bar, this up bar, that's all a reversal bar means. It doesn't mean the trend is reversing. It means that that market went up enough to create a green bar when the rest of them were red. This reversal bar is not your entry, but it's going to set things in motion. The reversal bar begins the pullback. You can understand where the pullback is most likely to go by using those large and synthetic triggers, guys, from the bottom of the triggers to the top of the triggers. This is your retracement zone. This is where those up bars are most likely to continue up, but trigger lines are not your entry. Inside of triggers, somewhere below the top and above the bottom, needs to be areas, fibs, midbands, or yellow one-to-ones. The areas inside represent the point where the market is most likely to bounce, where it's most likely to continue with the trend. You're going to learn to trust this so much that you'll activate a limit order just below the lowest point of resistance, the area closest to the reversal bar. And this is going to become your entry for the highest probability trend trade. This is where you're going to get into the market with the advantage of momentum, with a clear path, and right where the trend is most likely to continue. By defining where the market is most likely to continue, you're going to begin to understand that once you get beyond those areas inside of triggers, once you get outside of those large and synthetic triggers to the wrong side above them for a short trade, the advantage of rule number 3 is no longer in play. Once you get to the wrong side of the triggers, it's really kind of a crapshoot. You don't know if the market's going to continue down. You don't know where the market may continue down from, guys. Your advantage is gone on the wrong side of the triggers, so any areas up there have nothing to do with the equation for entry. It has to be inside. In an uptrend, large chart, background is green, triggers are strong, nothing in the way. Your small chart is railing to the top side, and you're going to wait for that red bar, for that down bar, that reversal bar. And that reversal bar is not your entry. It just says, hey, here comes the pullback. And then you'll look to your large and your synthetic triggers and maybe make a mental box or an actual box and say, well, this is where they're most likely to push to. Somewhere from the top of the triggers to the bottom of the triggers. And you're going to remind yourself, that's not my entry. My entry comes from areas inside of triggers, fibs, midbands, or yellow one-to-ones. So in this case, you have a midband closest to the reversal bar. You have yellow one-to-ones a little deeper. Midband may stop the market, yellow one-to-ones may stop the market. I don't know which one it's going to be, but I know that because I've got strong triggers and nothing in the large chart, I want to be in closest to the reversal bar, just above the area inside of those triggers. That's where your limit order will be. If it continually crashes, Pete, you may need to rebuild a workspace. You may have a little nastiness in there. NinjaTrader will crash every now and then, but it crashes repeatedly when there's something a little yucky in there, maybe some bad data or something throwing a wrench in the works. If I get more than 2 crashes in the morning, I rebuild. I'll just create a new workspace. Once again, anything below the retracement zone, guys, anything below the areas inside, this is where the market should not go. Any lines beyond those triggers are not a part of the entry. Once you get to the wrong side of the triggers, you don't know if or when the market's going to go up. The advantage of rule number 3 is no longer in play. And you're going to use that concept because if you spend a week or two focusing on nothing but entries, getting really good at entries, what you're doing is you're defining where the market is most likely to continue with the trend. But you're also defining where the market should not go if this is going to be one of those winners, guys. And your initial stops will be placed where the market should not go. Your initial stops will be 4 to 5 ticks above the trigger lines or below the trigger lines for a long. Because that is where the advantage is gone. And once the advantage is gone, I don't want to be in a trade anymore, guys. In any trade, any pattern I'm taking that typically wins 70 to 80% of the time, I understand fully 2 to 3 out of every 10 trades it's going to hit my stop. And what happens is when you believe these advantages, when you study these advantages, when you trust these advantages, you begin to not care if they hit your stop. You begin to learn that losses are a cost of doing business in trading, guys. That small losses are a normal part of a positive equity curve. And these tighter stops right beyond all the good stuff, guys, they're going to keep your losses a little smaller and allow you to let your winners really win. So this is the pattern. This is the two charts together, guys. The large chart says up. We're talking about this bar right here with the tail. Everything is up. The momentum is strong. The path is clear. And guys, the market will be trading all the way up here at 97.05. And you're going to say to yourself, oh no, they're going without me. They're going to hit the pink line. I'll never get paid. I'll live under a bridge. And then the reversal bar happens. And that's coming from the very top, which is why patience is so important. And that reversal bar says, hey, the fight is on. Where's that fight most likely to go? Somewhere from the top of the triggers to the bottom of the triggers, somewhere in that zone. But where is it most likely to bounce? It's most likely to bounce at the areas inside. And you can see that's exactly what it does here. This tail on the large chart is the whole push down to your entry. That bar continuing up, you don't see it. Your advantages never go away on the large chart. You may get a loss of momentum on the small chart. Doesn't phase you. Momentum is over here. You may see an area on the small chart. Doesn't phase you. Areas are defined over here, guys. Your great entry is going to create the furthest room to your target. Your great entry is going to create the least amount of risk in this trade. So this is your pattern. This is also how you're going to study. So if you go back to a large chart, and there it is right there, and man, the market hasn't been playing nice this morning. I'm going to go to crude oil and see if maybe crude oil has one of those tails. And it looks like crude oil has been kind of range bound too. Is there something going on in the world? There we go, guys. There is all the momentum in one of those potential to break looks, and I'm going to circle the tail. I'm going to scroll back, G7 meetings, and I'm going to find that tail on my small chart, guys. There's the reversal bar. This is where the market may retrace. Guys, you see they never get below the retracement zone. They make it to the lower level. There's areas inside. Your job is to take that entry, to hold that entry, and if you did, you were rewarded handsomely. Guys, that's your pattern. This is how you're going to study it. Go circle a tail when the rules are met. See if it fits the rules for entry. Let's see what this one looked like. The further you get beyond those triggers, guys, the more indecision there is in the market. But there we go again. Pulls right back to the mid-band, right at the top of the triggers with all that momentum and not hitting the area yet. Guys, this is what you're going to do to study. This is going to make it easier to become a chart reader in the moment. There's your momentum. There's your reversal bar. And my area is just on the wrong side, which means rule number 3 rules aren't met. I want to talk about how you're going to get to where you want to be fastest, guys. This is part of me giving you everything you need to be successful. I want you to remember you are my horses. This is your water. Whether you choose to drink is up to you. The goal is that you can look at your large chart, identify momentum and path, and this is the core of your education, guys. This is the one thing I want you to believe, that once you understand that, you really will have everything you need to find a way. So once you understand these two concepts, it opens the door. So take 25 pictures each, guys. Take 25 pictures of strong triggers, what it looks like to have that strength. Describe what it means when you have this look. It's the only way rule number 1 is met. And then take the time, hold on, let me find it, to take pictures of weak triggers, identifying why it's weak triggers, why you're not going to take that trade. Take 25 pictures of termination conditions. Take the time to write out why it's a termination condition. Take 25 pictures of a clear path and how you came to that idea that it is a clear path. If you do this, if you take the time to do 25 pictures each, guys, you're going to be a chart reader. You're going to understand the look that brings you the advantages. And once you can do it for strong triggers and a clear path, you're going to start to see more in the market. So post these pictures in your spreadsheet as you take them, guys. If 100 pictures seems overwhelming to you, take 5 a day over the course of 5 days. What is today? May 20th? My yearly count is 3,166 pictures. I'm over 10,000 pictures if you include last year, coming up on 1,100. Sometimes getting where you want to be isn't taking trades hoping they work out, hoping that you suddenly become a better trader. I tried that in my golf game. I kept going to the golf course and I never got any better. But when I started going to the driving range and working on the fundamentals that it takes to have a good golf game, that's when I started to see progress. This is what you're doing here. These are your batting cages. As you go through and take those pictures, I'm going to give you the cheat sheet, what it looks like. So this is the high probability trend trade checklist. This is a way for you to guarantee that you're seeing things correctly, guys. Is the market coming from a strong top or bottom is the first item on the checklist, because this checklist is designed to optimize your chances of success. A strong top or bottom isn't mandatory for a high probability trend trade. You can take a high probability trend trade without it. It's not one of the rules. But if you see a termination condition that reverses the market, it's a strong top. If you see a no triggers through termination that reverses the market, it's a strong bottom. A strong top or bottom is a precursor to the highest probability trend trades you can take. A strong top or bottom is rule number 1 for the second trade on your plan. It's the first rule for HVA trades, for momentum trades, for white bar breakout trades. So recognition of a strong top or bottom will pay long-term dividends. Then the second one, this is the first rule though. Do you have strong triggers? Is it strong or is it weak? Only one look, strength, should get you to the next item on the checklist. Is it a termination conditions? Not true. No termination conditions. So did price reach an area with all the triggers above? Absolutely no trades. Wait for the reaction. Did the small and large get below support? It's now resistance. The path is clear until I reach the next area. This is my look. This look and this look set you up for the transition look of an area breaking, guys. Trigger lines tell the stories, and when your small trigger lines smash through an area with those strong triggers, guys, this is the look that lets you know that that fib has the potential to break. I'm giving you a plan to capitalize on trend trades here, but it's not a clear path. That's that one issue you have to manage assertively. So as a high probability trend trader, this is your only look. Small and large below an area, nothing in the way. And then you have to define your entry. And an area inside of triggers, guys, such an important phrase. This shows you how to define the entire entry from start to where the limit order goes. Practice it, get comfortable with it. And then this is the trade checklist. This is the same thing, just void of the pictures. Is the market coming from a strong top or bottom? Do I have strong triggers? Are there no termination conditions? Area inside of favorable large triggers. Guys, I want you to, and you don't have to, can't make you do anything, but every time you take a trade, I want you to address these four things. I want you to identify where the market is coming from, whether it's a strong top or bottom. I want you to point out and identify right on my chart strong triggers. It can be a yes or a no, but let's make sure you understand what you're up against if it's not. I want you to write termination conditions, yes or no. Let me know how you're reading it. And then this last one, if you get in the habit of writing entry, pull back to an area inside of triggers, pull back to an area inside of triggers, write it on every trade you take. When you're looking for entries, guys, it puts your eyes in the right spot. And this is how you're going to hold yourself accountable to following a plan. You're going to write these on the chart. You're going to make sure that they were met, and you'll never have to ask me, "Hey, Mark, did I do this right?" You'll say, "Hey, Mark, my rules were met." And then if there was a challenge there, we'll address it. But nobody in the history of this checklist has ever done worse than 70%. No one in the history of this checklist has ever followed it truthfully and come to this room and said, "Mark, I can't seem to get above 70%. Most people find themselves in the 80, 85% range. And that's what brings us this checklist, best of the best, to your plan, KISS plan. The KISS plan uses that checklist. And the KISS plan is a stepping stone in your learning journey, guys. It's the beginning. It's a step one. This is freshman year in high school. And this plan is designed to optimize your chances of success with that high probability trend trade as you learn to read your indicators. It's going to be through simulation, through study, through class feedback, continuous practice. You'll be able to write your own plan, and it's going to be based on your ability reading the indicators, guys. But there's two things you have to know before you enter the market, not on sim. I need to know why I will enter a trade. And I know that people hate this. What do you mean I have to follow rules? If it's going up, I'll go up. Guys, your rules being met is your reason to enter a trade. Your rules not being met means that you're going to sit on the sidelines because your money is worth having an advantage. Guys, your rules describe the pattern. Your rules tell you that the pattern is true, and the pattern will have been proven to win more than it loses. I don't care if it's a high probability trend trade, a momentum trade. I don't care if it's y'all's jump the fudge in trades. But it should be repeatable, it should be testable, it should be provable, and it should create an overwhelming sense of confidence in you that you have the potential to win more than you lose, which means that you should never hesitate or overthink when it's time for an entry. And because it wins more than it loses, but it still loses on occasion, you don't set yourself up for this distraught feeling if it doesn't win. You'll simply say, "Wow, I had the best pattern, my rules were met, the advantages were there. This must be one of those 20 to 30%. It removes the emotions from trading, guys. It really does. But then you have to know why you're going to exit. And this tends to be the shortcoming for most people, most new traders, is we love to get into the market. It's easy to get into the market. But if you don't know what got you in, how do you know when it's time to get out? Exits are taken either at profit targets, predetermined or key areas, or when the advantages that get you into the market are no longer present before you hit those targets, guys. One of those examples would be the market goes 4 to 5 ticks beyond the triggers where it shouldn't go. That would be exiting a trade before the profit targets are hit, and that's a loser. And losers happen, guys, and it's okay. We don't have to turn them into huge losers. I used to have a gentleman in this classroom. He would put thousands of dollars of risk on trades, hoping it would just go down. And for whatever reason, he lost more than he won. I haven't seen him in a while. If I enter the market I'm in a high probability trend trade. 3 divergences print. I've lost my advantage. My large chart triggers get weak. I have to be on my guard. So when you know what gets you into a trade, name that trade. This is my trade. These are the rules. These are my advantages. It's going to help you manage because you're going to understand when those advantages go away. So first and foremost, define your entry. This is what it takes to get me into the market because this pattern provides an edge. And then you've got to manage it. You've got to do something with that great entry. And great entries create very manageable trades. So you're going to say, I'm in this trade. This is what it's going to take to get me out. And you're going to commit to that plan. And the KISS plan is designed to make that a little easier on you as a brand new user. The same way you're taking checklist entries. This is what it takes to get me in. This is what I'm looking for. You're going to do the same thing for management, guys. It's going to be just as mechanical as your entries. And the KISS plan is designed to get you in with 2 contracts. It's designed to get you focused on and trusting stop placement. And it's designed to get you paid, guys, because for whatever reason, you guys hate to get paid and get out of the market. You would rather suffer and lose than get out of something that you think may continue. So this is going to help break you of that habit, guys. And you'll create your own trading plan once you can read your indicators. But let your initial plan be very if-then, very mechanical. If my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers, guys. This is where the market shouldn't go. And you're going to know your risk before the trade is ever entered. And your targets are going to be predefined at $100 and $200. And if they don't come get you at break even, it means that they gave you that magical reversal bar. And that reversal bar is what we call a confirmation bar when the rules are met. When you have strong triggers, a clear path, an area inside of triggers, guys, this down bar is confirming that your advantage has been in play and now the market's doing what you want it to do. And this reversal bar is going to allow you to redefine where the market should not go. Now the market should not go 2 ticks above that reversal bar. Your initial risk, maybe $120 to $150 per contract, has just been reduced to $30 per contract. Because of your great entry, this is a very manageable trade. This reversal bar doesn't guarantee a winner. But there's 2 options. You're either going to take a small loser or it's going to go to your first target at $100. Guys, $100 feels good. I don't care who you are. A $100 win feels awesome. A $100 win dries up sweaty palms, gives you confidence, life is good. And once you hit that $100, you're going to move your stop to break even. And now you have no risk in the trade. You've only got 1 contract on. Profits have been taken. And now you're going to learn to trust that large chart because the only reason you took this short in the first place was because of momentum and path. And you're going to hold for that $200 target. And ladies and gentlemen, if you hit it, if you hit that $200 target, that's a $300 trade. It's not even a $300 day. That's a $300, 3 to 4 minutes of your life based on 3 advantages, based on a great entry, based on a very pragmatic management plan, guys. And a lot of people are like, man, $300 sucks. What am I going to do with $300? Guys, that's a $75,000 a year if that's the best you do every day. Knock it up to $400. Take 1 more trade. Let it go break even. Guys, $400 a day is 6 figures. Most traders would rather end a day negative than stop at 400. And I want you to address that in your own world as you're writing your plan. If you're not hitting consistent numbers every day, focus on that. Learn how to get paid, guys, because daily profits consistently, that's what reaches the long-term goal. And as you grow and learn and understand more, the potential for higher rewards becomes evident. But what happens is brand new users have this entitlement feeling and they're like, well, I want to make $10,000 a day with my trading, and they believe that they should make it right out of the gates, guys. It's no different than all these 20-year-olds that feel like they should be making 6 figures right out of college, and they don't realize that everyone, all of us that learned how to make 6 figures, it took a little time, a little effort, a little practice, and a little bit of elbow grease. So you're going to get there, but you're going to learn how to do it consistently. And I'm going to share this. This is something that I got. This was created by a Nexgen user years ago. How to achieve your daily goal of $1,000. And it says make $239 a day for 21 days on a one lot. And you'll double your $5,000 account. And guys, you will have made your $100,000 and be up to $1,000 a day by day 200, trading day 200. That's the end of the first year. And it's based on making $239 a day. It's $250 before commissions. Never going over 4 contracts. It's not about making all the money, guys. It's about making the best money, making that money consistently, learning how to get paid day in and day out for long-term success. So everything you need, guys. Here's a zip file, all you need. Inside of the zip file, hey, good morning, Miss Trina. Happy to have you back. Inside of that zip file is Chart Reading 101, your roadmap to getting to where you want to be the fastest. It's the high probability trend trade checklist with the pictures, making sure that your study is being done correctly. It's the KISS plan with the best of the best entry for the high probability trend trade. And then the 50-50, the potential to break trade, is right behind it, that relies on your understanding of the high probability trend trade to take it successfully. You're also going to get the daily goals, reminding you that you don't have to make all the money in a trade, make some of the money consistently. There is also a document called exit conditions, and this is why I say name your trades. If I'm getting into a high probability trend trade, guys, there is a very specific set of rules that get me in, which means that I can identify my advantages going away, which means that's my exit condition. By naming your trade, you're going to be able to manage it more efficiently. There is the pictures you can take. Guys, take pre-trade, take during the trade, take after the trade, take no trade. Get in the habit of taking as many pictures as you can. Every picture, every time you type on a chart, it creates a correlation between what you see and what it means to you. And then finally, everything that we've talked about in the last hour, consolidated into 2 pages for you guys that like the Cliff Notes. This is what we do, how we do it. Momentum and path are the core. That's the rules, the charts, the indicators, each advantage broken down individually and how to identify it, all the way to entry and how to study. Now, I told you guys that by the time this first hour was over, you would have everything you need to be successful with the software. You have rules, you know how to study them, you have a spreadsheet to track them in, you have every document I can have to help get you there with the highest chance of success. Inside of that zip file is even the PowerPoint that I use to teach every day. The only thing that you don't have is the repetition, the seat time, the time on the pond, as my buddy Pete says. Now it's your job to go take pictures, to take trades, to get feedback, to record these things, and to commit to following rules. So as we get into the second half, what we're going to do is we're going to start looking at your charts. We're going to start talking about what you saw, what you did, where you did it, why you did it. I'm going to remind new users, and this is such an important lesson, and I'm going to tell you that this document here is a response to an email from a very aggravated gentleman or lady, I won't specify, but they were pissed off that people in the room kept breaking rules. I don't know who dubbed them the trade police, but they really took on that role. Guys, the key to all of this is having a foundation. Understanding a couple basic concepts, taking those concepts and compounding on them every day, getting a little bit better. So for you brand new users, and I know that it feels like this, I blanket you with very conservative rules, recognition of advantages. I hand you a solid plan that optimizes your chances of success as you learn to read the indicators, guys. So for you new users, no momentum, having terminations, areas on the wrong side of the triggers, all of these things are bad. They feel like it's the end of the world, and I want it to, because these blanket rules increase the likelihood of success, guys. The success brings confidence, and when you have confidence in a plan, you're more likely to stick to the plan. Sometimes you can trade without these advantages, and that's that second trade, that potential to break trade. And you're going to get there quickly, but as a brand new user, You don't have the experience. You don't have the reps to read your indicators fast enough to start looking for all the trades. So you should be looking for the best trades. The more time you spend with the software, the more you're going to see. So I encourage you guys, I don't insist, that's not my job. Learn the process that yields the results. Learn how to make your $200 to $300 a day consistently. Learn how to put it in the bank, to be willing to exit trades. Learn how to enter at the best spot. Learn how to follow your rules and your plan. And if you keep it that simple, if you're okay looking for the best trades, guys, rather than all the trades, you can find an extraordinary level of success. Um, I've seen it, watched it. That KISS plan has funded people in prop firms inside of their first 30 days with Nexgen through simplicity. Um, the further you deviate, the more you look for, the harder it is to find the patterns, guys. So question everything. I encourage it. I want you to learn. Give yourself a little grace. You're new. And understand, guys, that when you deviate, when you break rules, I'm not afraid to tell you. That's my job. My job is to tell you the chart reads. So it's important as we get into the second hour, the most important thing, the one thing that I really need you to do is I need you to tell me how you read your indicators. What got you into the trade? Don't tell me, ugh, I lost, or crap, they got me, or I thought I had my rules met. Write your rules on every chart, guys. Write a yes or a no, a Y or an N. This was my trade. These are my rules. Do you see something I don't? And my promise is I'll give you everything that I have. Um, Feel free to fight me on it. That's okay. But fight me with a picture. Fight me with a rule. Fight me with something like that. I love it when you guys fight. I learned something. If you don't tell me, well, I was looking at a different chart, how the heck am I going to know that you were looking at a different chart? If you don't tell me that you assumed that because of the strong bottom resistance would break, how do I know what your read is, guys? So be very detailed when you post in the room. The room is for feedback. The room is for analysis, guys. The room is not your grandmother's refrigerator. I'm not going to pat you on the back, say, very good, sweetie, and post it up for grandpa to see later. We're going to get better through every picture that you post in this room. So be ready for the feedback. And I'm going to leave you guys with crude oil, which has green small triggers and red large triggers, which means that I don't have the advantage of momentum. So I'm not even going to look for a clear path because it doesn't matter to me if my advantages aren't there. I'm going to go take a break, guys. I'll be back in 5 or 6 minutes probably. When I come back, we're going to start looking at pictures, answering questions. The last part of class will be dedicated to also going after TradingView, looking at the indicators, looking at the trade setups that Nexgen teaches with them. John got great news. I don't know if you guys saw it in the other room, but the servers are up for the funding company. And it looks like going live is about to be a go. Let's see if I can put that in the room. That was the picture that he posted, and that's pretty darn small. Server was created. Now we're going to make it live. We'll take some time. So awesome, awesome news. Guys, watch crude oil. See what it does. I'll be back in a few. Talk amongst yourselves. Post them if you got them. So I'm back. I guess not having momentum didn't push it up. Weird. And then it hit that mid band. Those large triggers never blink, and it came right back to them. Good stuff. Guys, I'm going to scroll up to the top of the room. I've got all of 10 pictures to look at, so I'm really going to be hopeful that you guys have some questions on your mind. At this point, we can open up the floor for TradingView as well, since there's not a lot of pictures. I guess those G7 summits are messing stuff up. Pete got us going today. I like this one a lot, Pete. Pete says, check it out, Mark. Momentum. Momentum starts everything. Big Mo, as the cool kids call it. And he goes, you know what? I love momentum, but I respect areas. And Pete, with all of that momentum, takes an opportunity to trade just up to Fibonacci resistance. And then he sits on his hands for a second. He says, hey, I don't know what the reaction's going to be. Let me wait and see. Let me let the small chart show me as well. Small chart's got odds favorable momentum. Large chart has odds favorable momentum. And Pete just says, you know what? I'm going to ride that momentum. I'm going to get paid because it's only momentum. I'm not taking all the advantages. And then if something changes, I'll exit. And guys, this is outstanding because this is a trade where he trades to an area, pumps the brakes, and then trades from the area. And that's one of the easiest ways to do it, guys. Rather than trading into areas and hoping, just taking a second and relaxing. And you'll find this is your range. Like, that's your trouble spots. And that's exactly what he's doing, is he's coming up. And everything is based on that momentum, and he recognizes trouble and gets into the other side. Nicely done. Next one, we had a termination, we had a termination, we have a termination. All the terminations. And Pete says, you know what? Between this fib and that divergence low, I think I can make a little money as long as I have that momentum. And he did. And that's exactly what he does once again. He's getting in south of the fibs, and he's getting out before that divergence low. And probably keeping eyes on it right at those one-to-ones. Actually, he's in just below those one-to-ones, which is even better. Clearing the trouble. Nicely done. All right, scrolling up. The Wayne Show. Got 5 of them. I like it when you guys do this. When you're like, you know what? Let me show you 5 pictures so you don't have to keep going back and forth. Wayne says, street fight between the buyers and sellers. I do this too. Maybe it's my fault that he does it. I like to think of scenarios, guys. If I don't have momentum, I've got a vision of what it means to not have the momentum. If there's a termination condition, I see brick walls. And if there is weaker triggers, multiple divergences, indecision, and this is exactly what he's looking at here, is up bars, down bars, up bars, down bars. Everything says go up. Everything says, hey, you know what? We're going up. The trend is up. The triggers are up. Odds favorable up. Everything says up. And Wayne says, you know what? I'm going short. It was short-lived for a tick. It's a lot of work to fight every chart, guys. And I know Wayne's got a pattern that he enjoys. And Wayne, one of the things that I think that we found is very consistent with what you're looking for on that counter trend trade is that if you don't have a Fibonacci area supporting it, it's less likely to work. It's more likely to create trouble. And that's the trouble you got into. I'm glad you paid your commissions on it. But when everything says down, strong trending market, Wayne says, man, I'm going to jump in with momentum. And then Wayne, your momentum goes away, but you decide to hold and you add on to the trade. And it works out nice. Big trend trade all the way down. So there's your jump in below everything, getting in because of the momentum. Guys, when the momentum fails, he turns it into a trend trade. Uses the HVA. I like that. And then down it goes. Hey, Wayne, are you with me in here? Did he leave? I don't see his avatar. So for you guys that are coming in, and I'll save this picture so I have it for him for later. For you guys that are coming in, you're starting to activate these 1 minute charts or market flow charts. One of the things you'll see, or just even the introduction of outer bands. A lot of you guys go see it on TradingView. When the market is trending strong down, these outer bands can behave as resistance. And that's exactly what Wayne did, is he took a trend trade off the outer bands. And I don't know if he's noticed that pattern yet. He's not here. So Trina, your job is to steal that picture and give it to him. Whoops. Not just the saying. Well, actually, even the saying. Trina, you get to play teacher. Thank you. But you guys will see that as you begin to add these outer bands into your work zones. Very often they can behave as resistance, and when there's an HVA line there and everything's going down, it's great trading by Wayne. Everything says down, he goes down with it. Easy money. And here's where we got into some problems. Price reaches resistance or support. All the triggers are above it. Everything has changed on the other charts. And Wayne goes short directly into a termination. Small charts have already shown change, that it's less likely to work. And guys, this is one of those ones again. This is a lot of work. These fibs are like brick walls, but when you see 3 or 4 of them break, you're like, well, this one has to break. And they don't. And once again, that one that you took a couple commissions on, you gave them back trading into termination conditions. Trying to go long when everything is screaming down. He goes, I made $60. That's awesome. Guys, I don't care about your money. I care about your longevity. Odds favorable, momentum down, room to the target. Odds favorable, momentum down, room to the target. Odds favorable, momentum. And it goes right to the target. And Wayne, I hope you're listening to this. I hope you come back and watch this video. You jumping in, counter everything is 32 flavors of stress. Having a termination condition to at least give you a fighting chance is going to increase the odds. So I told you guys, you're going to see trades where everything is perfect, and you're going to see trades where people fight. And they're not right or wrong. They're just different. But I will point out the fights. All right, Miss Cindy, odds favorable, potential to break. Cindy, why do you suppose that's a good bottom? All of your triggers are below Fibonacci resistance. Every one of your triggers made it below the area, and this pivot came from the middle of nowhere. Unless you have a different definition of a good bottom, this is so far outside of the definition that I provide you guys. So I'm going to go back and we're going to find a little study tool. And I'm going to drop this in here as well. Guys, strong top or bottom is one look, one set of instructions, one recipe. And it has to be a termination condition first. It has to be. And none of the triggers can get through that termination. So guys, this is a termination with no triggers through it. When it reverses, that's your strong bottom. This is your termination with no triggers through it. Once it reverses, that's your strong top. That's your strong bottom. So Miss Cindy, you have a pivot from the absolute middle of nowhere. You do have momentum, and you've only got the potential to break that fib. You just jumped into the market, and then it pulls back, so that's where at least you had a fighting chance. Early entry creates more risk. I don't know that that was a mistake. I think that saved you a lot of money with divergences on a 50-50, Cindy. I think this was the trading gods looking out for you because you had a weak bottom And when that divergence prints, that area is less likely to break. When that second divergence prints, it's even less likely to break. And sure enough, look at the big push down. Think maybe you got away with one here with that entry. Good stuff. Then odds favorable, strong triggers, potential to break the 1-to-1s. You hadn't reached the fib yet. Perfect entry, and then out at trouble. Nicely done on the second one. So much easier here. And this one was easy, Cindy. I don't know if you guys are listening. Can you guys hear me? Because this weak bottom says, hey, we may continue the push down. Okay, just making sure. Good stuff. Better Dad, do me a favor. Give me some indication. So enormous trigger window, so I would have waited for confirmation, knowing I might miss it, but there's always the next one. So you have strong triggers, you have room to the midband, you have an area in the retracement zone. You didn't want to put all the risk on it. I like this. So you enter with confirmation. Confirmation gets you into the first two profit targets. Nice. I like it. And if you never get confirmation, you never take the trade. This is great use of a confirmation bar. Guys, let me show you why. Better Dad did it perfect. At the time of the reversal bar, this is where that market may retrace using the large and synthetic triggers. And Better Dad says my rules say I've got to put my stop where the market shouldn't go, way down here. And then from 27 to 27.7 to 26, it's $170 worth of risk. So Better Dad says, you know what? I'll force the market to go in the direction of my trade. And this is going to help me reduce some risk. It's brilliant. That's okay. I'm sorry you have a fever. And then pretty easy $300 on that one. And even if you don't take the trade, Better Dad, you went through everything and why. Which means that you have something to look at tomorrow because you know this was a good trade. Great job on that one. Whoops. You said the next one was a learning opportunity. Weak top, odds favorable. You entered at the mid-band inside of the retracement zone. And then just hoped forever, huh? I love the look. Large chart look is perfect. Oh, the kid? Even worse. I'd always rather it was me with a fever than one of my kids. I get it, though. Love on that guy. Strong triggers, clear path, nothing to the next. This is such a good look. Pull back, and you are in a couple ticks below the midband. Perfect entry. And you just held that stop. Trailed price after it started in your direction, but turned back and stopped out. Oh well, still the right look. I agree. You waited for the reversal bar, and then when it comes down, this is one of those things too. Man, I like it. It's hard to be mad about this one. Your large chart was perfect. Your entry feels low, but it's not. 48.5 is perfect. It's $200 a risk on this trade. It's a lot of risk. It is a lot of risk, but you accepted it. It's a $400 risk trade. And the only thing I can point out is maybe we could talk about a chart read. And that's a good word for it. Gold can be very persnickety. Gold is emotional. There's some people that trade gold beautifully. They get in tune with it and it's easy for them. And then there's people like me. I won't touch gold with a 10-foot pole. because for whatever reason I can't get in with the flow. You did everything right. It just didn't work. That's all it was. Just didn't work. You had every advantage. Your entry made sense. It just didn't work. And that's just part of it sometimes. And it's easier to accept if you go back to the rules and you realize, hey, I followed all the rules. First trade, strong bottom. Pete, pushing the bounds of directly into a termination condition, I think. At the time of the pullback, the small triggers would have been close, but with the strong bottom, with the momentum, willing to take a shot, just didn't work. And you're right. Don't know why I didn't see this divergence glaring at me. Entered at the pullback at the mid-band, stopped out 10 ticks. Divergence is the biggest killer, especially from a weak top. Well, it's not a weak top. You're coming from a strong bottom, which helps it. Odds favorable momentum helps it. You had strong triggers on the small chart. It helps it. That divergence was the first indication that things might be changing. And they just changed fast, Pete. This is one where I usually see you wait for confirmation because that divergence tells you it isn't perfect. But I mean, you had, and if I go to the KISS plan, because I don't want you to feel bad about that one. You know, when you go to the KISS plan, you had your strong bottom, you had your odds favorable, you had your odds favorable. You had 3 out of 4 of them, man. Divergence is the biggest killer. Because of the strong bottom, you gave it a shot. I don't know. I don't think I'd have any regrets about this one, Pete. I think that you gave yourself way more advantages than disadvantages. And then you can go into that thing, you know, ifs and buts, candy nuts, whatever. Well, if I only would have waited for a confirmation bar, well, then I wouldn't have taken the loser. But I feel like with your ability to read charts, I think you would have taken it even if you saw it because of the strong bottom, because of the momentum. Because I see you trade in determination conditions all the time with divergence. I think you're looking for a reason it didn't work, but I think based on history, you probably would have taken that one anyway with this level of momentum from a strong bottom. I don't think the divergence would have been a deterrent. But again, let's celebrate, right? This one didn't work. Acceptable losses. And then when everything changes direction, man, you just ride it, and it's beautiful. Money, 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 and then your trailing stop, and you got to take losers every now and then. You tend to back yours up with winners. Great job, Pete. 4 from the wonderful Miss Trina. Let's see what we have. All right. Strong bottom, strong triggers, odds favorable, potential to break, perfect entry, out at trouble, and then Trina, you just got married to it, didn't you? Just got married to it. Oh, break even. All right. Trina, can we do a little lesson? You got time for me? And this kind of goes on what Pete says. See that divergence right there? So divergence is the biggest killer of 50-50 trades. You took the perfect entry. You took the perfect first target. So just a little management thing. If divergence prints, it's okay to exit with that killer present. Does that make sense? Just a little management. Execution on this was beautiful all the way through. And one of the things when you go to that KISS plan, I'm going to bring it up because you guys are doing these 50-50s, is in management, the best of the best way to do it, it actually says if divergence prints, exit the trade. But I do understand that you went $100 and break even, right? Yeah. So I love this, and especially since we're running out of pictures. What a great lesson. If I enter the trade, and this is why naming the trades, Trina, is so important, because when you look at your plan, let me make this smaller. When you look at your plan, you're saying this is what it takes to get me into a high probability trend trade. This is how I'm going to manage that trade. So when you name it high probability, you have a very specific entry and management plan. And then when you said I'm getting into a 50-50 trade, not only do you have a different set of rules for entry, which you followed beautifully, but what you did is you incorporated your high probability trend trade management plan instead of your 50-50 management plan. Does that make sense? It's very common, guys, and I see it too. People enter a momentum trade. And when they enter that momentum trade, they try to manage it like a high probability trend trade. Or I see people enter an HVA trade and they try to manage it like a momentum trade. So it's important that you kind of go through the idea. This is what I'm taking, and gosh, I love this trade. And I love the first targets because the KISS plan says first sign of trouble, take profits, get to break even. If divergence prints. And Trina, when that divergence prints, what I'll do, let me go back to your picture again because we're playing management lessons here. Because you are refining. You are so solid these days. I love it. So you'll know that divergence is true halfway through the second bar. So what I'll do, and this is just me, if divergence is one of my exit conditions, I'll put my stop 2 ticks below that reversal bar because I'll see whether divergence is true or not, and I'll keep my finger on the X. If it's not true, I'll cancel that stop and move it back to where it was. But if it is true, and it happens fast, I only give back 10 ticks instead of 25. Does that make sense, Trina? So what that looks like in a live market, let's say hypothetically, if divergence prints, I'll exit my trade. So I'm going to put a buy in there. I'll take my stop, 1, 2, and I'll put it 2 ticks below that that reversal bar marker. Well, what it does is I'm telling myself, if I don't have the reaction time, if that market prints divergence and it goes fast, as happens a lot when 50-50s or trend trades fail, I've got my protective stop here where divergence is true instead of down here below the pivot or right here at break even. And it saves me some money. Let's see if we can get divergence to be true here. That's a mid-band almost gap theory. It may not. But what it does is it takes out my need to be super fast on the close button. I've got it where I'm going to know divergence is true. And if it's not true, one of the things you can do too is if your stop is here, take your stop and just hover it. You don't even have to click it and activate it. So if divergence is true, I'll click it and activate it. If divergence isn't true, I still have it down here, and I'll pull back and go back to it. So good stuff, good lesson. And I like that we can go on simulator and do that. Beautiful trade, Trina. Beautiful trade. Just a little long on the hold. But it's such an awesome lesson about how knowing what you're getting into lets you know when it's time to get out. So weak top, odds favorable, right into a termination condition. You take a great entry. So Trina, you traded into a termination condition. Do you see it? Not a 50-50. Price reached yellow 1-to-1s. None of the triggers had broken. This is how I would teach a class on termination conditions with this picture. Into term. Ready? That's okay. I'm going to show you guys my butt. I want to go through the good stuff. Second lower on large. Odds favorable momentum, both charts. No divergence on small. Low risk entry to retest trouble. So Trina, you've got, you've got a low risk entry. You've got a stack of advantages. You get out at trouble, and then once again, when that divergence prints, Trina, maybe a good indication that it's time to pull the plug. So you broke rule number 2. Rule number 1 was in play. Rule number 3 was perfect. So because 2 out of 3 of your advantages were in play, you could say to yourself, I'm willing to take this with the small risk. I'll manage it assertively. And I think that's it's such a growth point for everybody, because we start off super mechanical. It's this or nothing. That's it. It's that 50-50 perfect or nothing. And then when you start talking about the advantages, what you did is you just said, or you go into this trade and you're like, man, that's missing, but I still have these. I'll take it. I'll manage it. I'm okay with the risk because of all the advantages. And it's what my brother used to call the bar fight scenario. You're in a bar fight and you've got the rugby team behind you. They're a little liquored up and every one of their girlfriends just broke up with them. And then the captain of the chess club is putting 2 fingers in your chest. So you've got a lot more going for you. I love it. And then again, that divergence, when it's not perfect, it's all right to take that exit and then wait for it to come back and be perfect again. Great trading, Trina. Odds favorable. Potential to break. Yep, that is a killer. Divergence on a 50-50. Not a strong top. It's a weak top because the small triggers got through. So you had the best momentum ever. You didn't have a clear path. And your small chart started showing you that nastiness. So divergence on the small chart keeps showing up to mess up your good time, Trina. These are avoidable losses because you're missing the strong top and you have the divergence. So again, if you go back into the bar fight, missing this one, missing this one, so yeah, I like it. Good stuff. Great pictures. There it is again. You're 3 for 3. 50-50. It is a strong top. Divergence prints and just runs you right over. Those sons of guns. Does that make sense? So Trina, now I feel like every 50-50 you go into for the rest of the day, you're probably going to be a little more focused on your entry chart divergence, right? That's all we do in this classroom. For those of you that are kind of new, that's all we do in this classroom is we look at what you did and go, wow, there's your pattern. Great trading though, Trina. Great trading. Thank you for posting. I think we've got some good lessons for everyone in there. How to practice? Well, I hope you've been doing something fun at least. Weak, spineless bottom. I like the annotation better, Dad. Odds favorable, clear path, perfect entry, awesome stop placement. It printed here, but the fills were in your favor. Don't know why. Probably because the market went so fast, better Dad. Yep, look at that. The market was going so fast, it just had trouble printing. Let's talk about this weak spineless bottom though. It's a weak bottom, right? So, better Dad, are you with me in here? We're going to rewind. Before it was a weak bottom, it was a weak top. Any 50-50 below that is more likely to fail. If it does, the market is more likely to continue the trend up after failure. So this is a weak bottom, without a doubt, Better Dad. This weak top says that when this 50-50 trade fails, the market's more likely to do that. This is what John Novak would call the apology trade. Because if you tried to take the 50-50 from the weak top here, you got your butt kicked. And then it sets you up for the perfect high probability trend trade to continue with the trend that was already going on. Does that make sense? So it is a weak bottom, but a weak bottom after a weak top, it's a failed 50-50. And a failed 50-50, if a 50-50 fails, which way is it going? Your failure is up. And it gave you all your rules met. I love it. The other 50. There you go. I like that thinking. This is a beautiful trade. Everything about it. Nice job. And guys, this is why I say that a strong top or bottom isn't mandatory. It just increases likelihood. And then there's a bigger picture, Better Dad, that I'm just sharing with you because I know you like to do the study. And then everything says up. The path is clear. There's your entry, but it was too much risk. So you get in on the reversal bar, but it looks like you got in a little bit late. 86. So, man, it filled you way up there. And then behind the reversal bar. So here's one of those ones. No, I think that was, I think your execution on this one, Better Dad, was perfect for your plan. You had your momentum, you had your path, you took the confirmation bar, and they wanted to go lower, right? So this is the question that you'll be able to answer quicker in time. Is what changed? Why no entry on this confirmation bar? It's the exact same trade, isn't it? With the exact same scenario. A lot of times we believe that because we enter on a confirmation bar that we're entitled to a win. That's not the case. It still did everything that you would expect this trade to do. It stayed in the zone, right? You still had momentum. Your path was still clear. You were still at the area inside of triggers. There will be a time. You know I appreciate that. But there will be a time where you say, okay, this is my shot. Didn't work. Holy crap, nothing changed. I'm going to take another shot. That confirmation bar makes me feel good. I think this is one of those times where you could have done that. But it's a great lesson coming through. And then Pete, let me see. Lesson from $1 billion hedge fund trader. The key is to wait. Sometimes the hardest thing to do is nothing. David Tepper stole my quote. I like this quote because it's a good reminder that even billion-dollar hedge fund pros like Tepper treat no trade as part of the trading system. And if you've been doing this for any length of time, you know that's far harder than it sounds. Patience takes real mental energy, focus, and discipline. It's not easy to sit on our hands watching wicks while waiting for high probability setup, maybe the only one we get all session. But remember, in this game, no trade is better than a bad trade. No trade is better than a bad trade. No trade is better than a bad trade. We wait for our pitch, then swing. I like that, Pete. Thank you for sharing that. It's true, isn't it? I was having a conversation yesterday about how difficult it is to do nothing, but how it's okay to do nothing. Tried a momentum trade and realized I haven't studied it yet. So there's a lot to learn. That's fair, Better Dad. But let's do this. And let me help you with your study. Are you ready? You're going to like it. Is that momentum? Is that momentum? And the wise words of John Novak. How can you take a momentum trade if both charts don't have momentum. That is the easiest safeguard. That is the easiest safeguard, is you can't take a momentum trade if there is no momentum. So what did you have? So I want you to see this. And this is why going back to basics always helps. Did I have strong triggers? No. Did I have a clear path? Yes. Did I have an area inside of triggers? No. Always going back to those three. 66% of your advantages are gone. And this is fear of missing out. You were thinking mid-band because of a strong trending market. That's fair. 30 bars, ride in the back of it, sell the mid-band till it quits working, huh? It may have been. But let's talk about gold for a second. I believe persnickety was the word. I believe persnickety was the word. It's okay to wait for that confirmation at the mid band, because if it's really going to continue down, you're going to be all right. So if you were saying I had 1, 2, 3, 4, 5, you had at least 30 bars in the same direction. The smalls were riding the large. Sell the mid band till it quits working. Better Dad, I could support that 100%. But do you see how momentum trade doesn't work? And one of the reasons why we name our trades. I could get on board with sell the mid band till it doesn't work all day long, but you know what, Better Dad? The first one didn't work, and that's kind of a pain in the ass. So strong trending mid band trade, perfect execution. How much risk did you keep on it? 12 ticks. It was not momentum, because momentum, just even in the word, in the name, it says momentum on both charts, and you just don't have it. It was the perfect strong trending. Well, I think that you've got to give it a little breathing room, right? Because it's just a moving average. Averages have a range. It's just didn't work. Trade it until it doesn't work, and it didn't work on the first shot, Better Dad. I don't think there's any real challenges on this one. I mean, you don't want it 2 ticks beyond the mid band. What are the chances that it's going to hit it and drop? So you gave it room. You had your reasons. You labeled them wrong, but that's okay. That's what I'm here for, is to talk about that. You took a mid band in a strong trending market, and it didn't work. It's a great trade, dude. It really is. It's a good looking trade. And very often, it works. And it probably worked right there. But it wasn't really established yet. And the further you get into that strong trend, the less likely it is to work, because they get exhausted. Good stuff, man. I like that. You knew what you were looking for. You just didn't know how to describe it. But I'll go to my guy Billy Shakespeare. A rose by any other name still smells as sweet as a rose, doesn't it? There's your termination condition on crude oil. All right. Strong bottom, 50-50. 1 divergence, 2 divergence. Does anyone remember what's the biggest killer of the 50-50 trade? What's the one thing that makes it typically lose more than it wins? Divergence. And you know what that means, Trina? That means this one's probably just going to rocket up into space to teach us all a lesson about rule adherence. That little devil's going to land on your shoulder and say, but Trina, we worked this time. Stop looking for divergence. It's okay. No long-term effects. Your parents would approve. Take the trade. Because we've all done it, right? We've all traded into the termination condition and got lucky, and our brain thinks that that's the new normal. We've all traded without momentum. and got lucky, and our brain thinks that's the new normal. Um, One of my favorite little excerpts from Mark Douglas. And if you've never Googled Mark Douglas, guys, look him up on YouTube and watch his videos. He's absolutely amazing. He and John Novak worked together a lot in the 90s before Mark Douglas's passing. But there's a lot of things that he goes through. Are you in the right frame of mind to trade, right? Believe that you deserve a high level of profit in order to keep it. That's your money. Trading without fear, hesitation, internal conflict. Guys, that comes from believing you don't have to know what's going to happen next. When I talk about accepting that a trade wins 70 to 80% of the time, the other side of that is accepting that it loses 20 to 30% of the time. You never know what's going to happen on a trade-by-trade bias, but you don't have to make money. And I love that because it goes with everything that we do. Your rules eliminate the need to know what's going to happen next. I love it. What Pete was saying, being flat is literally putting money in the bank if your state of mind is wrong, if your rules aren't met. But the one that I wanted to look at is right here. Because that one time that breaking your rules works is enough for most people's brains to break the rules until they blow out. Using a series of trades, 20 to 25 is how you have to judge your performance. One trade may be good or bad, and you have no control over that one trade. But if you use the 20 to 25 trade rule, you'll be able to calculate your rolling equity curve, fine-tune your plan. Guys, you'll have a sample that you can look at, that you can take. And then Trina, oh, look at that, it pushed lower. Can I use your trades as an example? Is that okay? You're not going to feel on the spot? No, this isn't Trina at all. This is Timmy. Totally not Trina. But here's a great example. It's not one trade, right? 50-50 and divergence kills it. And then 50-50 and divergence kills it. And then 50-50 and divergence kills it. And then 50-50, divergence kills it. Oh my gosh. 4 for 4, right? So it's not the one time that divergence killed it that Trina's thinking about. It's the 4 times in a row that divergence was enough to kill the trade. Now, if Trina goes, you know what, but I'm going to take this one because I don't believe in my sample, right? And this one wins. And what you have is a trade that wins 20% of the time. And you have to go back to that sample thing, which means Trina, even if this one wins, or everyone in the room, not just Trina, her chart was just a great way to give us the example. Even if this one wins, this is a 20% look, which means that it's an 80% loser look, but your brain is going to latch on to that time that it won. It's that short-term victory that creates long-term failure. Does that make sense to everybody in the room? It's not if this one goes up this one time, it's the 5 times before it that divergence made it fail. That's our pattern. It's not the one time that an area stopped the market. It's the 25 times that it stopped the market, and you've got to learn to ignore the one time that it magically breaks and goes that direction. And that's how these rules came to be. And it was very much on that psychology put into place by Mark Douglas. Don't worry about one trade. Up and down ticks is all there is in the market. We're trading a pattern. The pattern has a memory. Reversal out of nowhere, hits the mid-band, sucks back to the large triggers. Not a pivot stop out though, is it, Jen? It's actually a pivot with a higher divergence. Do you know the difference between the two? Does that make sense, everybody? This is actually just a second higher divergence. That's okay. Let's keep looking though. So this is a pivot stop out. And this is perfect because we can look at this to identify the difference. First, we have the divergence, the same we did here. We have that divergence from a low. We have the divergence from a high. Price came back down but couldn't reach that divergence. Never a termination condition, just a pivot that went back up. It's another pivot from nowhere, right, Jen? It's not coming from an area. Up here, they reach the divergence high. That's your pivot. They let the buyers believe that they were going to win, and then they come back down. That's your stop out. So a pivot stop out, you're going to exceed that divergence line by a couple ticks and then trade back below it or back above it. Yeah, so since price didn't go through the bottom, we're just not calling it a pivot stop out. And right here, Jen, that's where we got our pivot stop out. So there's your pivot stop out. There's your pivot stop out. Do you see how price goes a little bit below and then continues up, a little bit above, and then continues down? And that's one of the great things about using divergence as a termination condition. It's literally a line in the sand. I told you guys that I create scenarios in my head for what I believe the people in charge are thinking. So the sellers are in control and they're pushing down and life is good. And right at this exact number, the buyers said, no more. And I'm stealing your momentum and I'm going to push it up. And right here, the sellers said the same thing. And right here, the buyers said the same thing. And right here, the sellers or the buyers said the same thing. So buyers say no, sellers say no, buyers say no. And then when the buyers get back here, this is what I hear in my head every time. Sellers say, dag nabbit, we told you no. We put a line in the sand. Gonna punish you now. And that's exactly what they did. They're like, buyers, seriously, we told you no. We even drew it out where that no was coming from. And they push them down. Whoops, wrong one. And the buyer said, well, we can do it too. We put a line in the sand. And you tried to cross it. And now we're punishing you. And if you think about it that way, divergence, highs and lows are nothing more than a line in the sand. Look at that to the tick. 3:30, the prior day, in the middle of the night, there's your pivot stop out, Jen. All of this happened. And right here, there was a huge reaction. Divergence, highs, and lows are one of the most ignored termination conditions. Did everybody avoid that loser? We talk a lot about avoidable losses, guys. When you know your advantages are gone and you choose to trade anyway, that's an avoidable loss. Trina, what do you think? Are you becoming a believer? I hope so. Imagine how much money this is going to keep in your account, even if it's just through management. I love it. This is my favorite thing about the class, guys. This is a pretty mellow class. This is a pretty mellow day. But there's been some really good, solid little lessons. Jen, there's your pivot stop out. Well, once the large chart says go, Trina, I don't care about the large chart anymore. I'm going to come over here and do some stuff. So if my large chart's perfect, I'm taking the trade. This is a good example right here. Momentum, clear path, perfect entry, make a little money, and then maybe get stopped out of it. Large chart was perfect. No reason to worry about this divergence. Beautiful entry, easy money, definitely break even by the time it happens. And then it's not perfect again, and it hasn't been yet. So if the large chart's perfect, just enjoy the large chart. Get rid of it. You're done with it. Let the small chart be your entry chart. Let your small chart help you manage that perfect large chart look. All right, guys, I'm going to take a break. When I come back, we will certainly talk about anything NinjaTrader, anything Nexgen, of course. Everything's Nexgen in this room. But if you have more NinjaTrader posts, if you have pictures, if you have questions about concepts, let me know. But I'm going to shift gears and I'm going to move over towards TradingView, guys, and I'm going to try to remedial it a little bit. We're going to go through, do some basics. If you guys that are working on it now and getting into that into that TradingView need a little help, have some questions, ask me anything and everything that you have. I'll do my best to answer it. And you'll even find that if I don't have the answer, I'm going to Google it right here in front of all you guys. And that's going to help you remember that you can Google this stuff too. 60 million users on TradingView. I guarantee your answers are out in the universe somewhere, but I'll help you if I have them here. So go stretch your legs real quick. And then when I come back, we'll do some TradingView fun stuff. Back in a few, guys. Look at that fight. Termination condition. Look at the fight between the buyers and sellers. This one bar says up, we're at trouble, even with momentum. That's your visual of buyers and sellers fighting at a termination. That's what you don't have to be a part of if you learn rule number 2. All right, better dad. Termination, odds favorable. Good management, entered at the mid-band, out, missed target 2 by a tick and stopped you out break even. That happens. Good looking trade, better dad. The one thing on this one that got you, when that second divergence prints, and those large triggers are a full bar away, it's not a rule, but that's something that I start to notice. If those large triggers aren't coming to the party, couple divergences tells you it's probably at least going to go to that other trigger line, go to the bottom of the retracement zone. Does that make sense? With all the strength, one pushes right to the perfect spot, and then 2 of them, that pivot stop out, yeah, well, it was a little short of it. It was a little short of it. But you have weakness, 2 divergences. I'm going to show you a pattern that'll help you manage these. If I have a pivot stop out here, it's more likely to create a pivot stop out here. So if the market comes down, whoops, and then it goes up and it creates that pivot stop out with divergence, it's more likely to take out the previous pivot. And guys, this is a pattern that you can see all day long. The thing that you'll notice is, that's not what I wanted. A pivot stop out on the small chart typically creates a PSO below. If there is no area for entry at that PSO spot, probably going a bit lower. And let's go see if we can find a real world example of that. And let me give you this picture in case you want to use it. Does that make sense? So let's go to a live market real quick, and well, there's a beautiful example. Pivot stop out, well, to the tick, creates a pivot stop out. So there it is right there. And now this pivot stop out, we'll see if it takes out that previous high. It'll either create another pivot stop out or continue up. But this is a pattern that you'll actually see a lot. There's your pivot stop out. So for me, this pivot stop out says that my trouble spot is this one. And if nothing changes, continue up. Another example, are you guys seeing it? There's your pivot stop out. It creates a pivot stop out and then continues in the direction. 3 divergences killed it there. If I was looking for the short trade, no, we're going to see. Does that make sense, everybody? Sometimes it does, sometimes it doesn't. There's your pivot stop out. It creates the pivot stop out and then continues down. This is actually a great example because it's going with everything. Whoops. All right. So first reversal bar, no entry. My second reversal bar is a pivot stop out. Is everybody with me? This is a good pattern. PSO at low, likely to take out previous high pivot. Look for entry area there. And this is your previous high pivot, and there's a mid band sitting right there inside. Does that make sense, you guys? I'm looking for the short trade, and it doesn't happen. And then when it creates the pivot stop out, I say to myself, all right, they're likely to take out that previous pivot. What do I have for entry there? There's your mid band. All right, good talk. Better Dad, that is, yep, there's your divergence high. There's the market trading above it and trading back below it. Does that make sense? Market trades above, and when it traded back below, it was a pivot stop out. When it gets back above it, it's just a market going up. But check this out. Everything's patterns. Have I ever mentioned that? If I draw a line off the top of that pivot, Better Dad, could we call this a pivot stop out without the divergence? They get a tick above and then it pushes below. And then it creates the pivot stop out here. So if you're thinking, I want to go long at the mid band, that little pivot stop out, that pattern right there says, you know what? I'm going to be patient because they're likely to take out this spot. I'll wait for it to get back above that spot. Create the pivot stop out below. There's a perfect example of it if you were going to use it for entry. Does that make sense? That one didn't have divergence, but it's still a pivot stop out. They go up and back down. And because of this divergence, the expectation is to take out the previous divergence. That's an awesome pattern. And it's not one of the rules, but there's things that you're going to start to recognize that you see that. Maybe a little bit, but they'll start to stick. And again, guys, I told you every now and then I'm going to point something out that I'm curious about. Please don't get upset with me for doing it. But if gold is persnickety, why trade gold? If you've already established that gold overruns and is difficult and has a bad attitude, why trade gold? Don't answer in the room. Just stuff to think about. I run into it with NASDAQ traders all day long. I want to trade the NASDAQ. I have to trade the NASDAQ. How are you doing? I'm getting my ass kicked. It's too fast for me. Well, then why on earth are you trading the NASDAQ? Doesn't make sense. All right, guys, trading view. That's what it looks like. But I'm going to break it down a little bit. Trading view indicators. I'm going to drop this in the room. I forgot that I made these. The first one's triggers. We're just going to talk about what you're going to see. So if you are making that swap over to TradingView, you want to learn to use it. Someone posted in the other room the other day, he's like, or maybe last night, this morning, I don't know, John answered him. He goes, when does the education start on TradingView? Indicator reading. And guys, it started when you bought software. It started when you leased software, when you began. You learned about trigger lines. You learned about small triggers and large triggers. And guys, this indicator, just because it's on TradingView doesn't mean it works any differently. You're going to use these to establish momentum. Divergence is still divergence, guys. And anytime divergence prints, it lets you know there's a loss of momentum at a pivot. Magenta lines at the high, cyan at the low. 100% the same. One-to-ones are still one-to-ones. They're still 100% Fibonacci alternates. They can act to support as resistance. They can be traded from or to. Mid bands and outer bands. So the outer band is the one thing that you guys are probably not going to understand if you're not using market flow. So the mid band runs through the middle, green and magenta, support and resistance, same thing. These outer bands are, I consider them points of exhaustion. And what you'll find very often is that these outer bands become a great place to take profits, and you can see how often they behave as support or resistance. They're not fibs, they're not buy and supply and demand zone. They're just saying the market's probably tired if it finally gets here. Maybe a good place to be aware of. And then zones. So zones are going to be new because we call them zones. Guys, everyone in this room. So David, TradingView is not Nexgen. TradingView, you have to do a monthly subscription or a yearly subscription for. You have to pay for that. It's like NinjaTrader. NinjaTrader's a platform. You have to buy NinjaTrader, or you have to lease NinjaTrader, or you have to have an account with them for them to and have their data to do it. So TradingView is, let me show you. Oops, wrong one. So TradingView, subscription prices and features. There's 3 levels that you can get, and David, you are liable for this cost. I use premium because I use market flow, and you have to have the premium in order to use market flow. It's $49.95 a month. If I'm not mistaken, guys, they've got a 60% off monthly right now, and I stink at math. That puts you like around $27 or so. So you have to, oh, there you go, 60% off annually. It's like 60 days free. If you go monthly, you can go to monthly. So David, this is on you. But if you are an owner, and you are, I see that green check next to you. All of the indicators, the workspace is everything that John Novak has had programmed for TradingView. Everything that you see here, the trigger lines, he paid programmers to make them look like Nexgens. Divergence, the same. One-to-ones, the same. Trend bands, the same. All of those, Nexgen leases to TradingView users for $99 a month. You, David, get those 100% free because you've already paid for software. So depending on how long you've been with Nexgen, back when Nexgen ran on, what was it called? TradeStation, and then NinjaTrader hit the scene and the switch was made, nobody had to pay for software again. So you guys have already purchased your indicators. They're gonna show up for you. The one that is the addition with the plans that we're using are zones, buy, supply and demand zones. And there's options out there. There you go, Jerry. Thank you for that. If you get the free 30-day, they'll offer you the 60% off. So these zones, Nexgen users want to call them fibs because that's what we're comfortable with. And guys, that's okay. Treat them like fibs. These are support and resistance areas. These are areas that you'll trade to. These are areas that you'll trade from. These aren't free. And there is Chart Prime. This is the best that John has found. And these are supply and demand zones, and these are the ones that I have. These are for Chart Prime. And these are awesome, and these things are accurate, and they're great for trading away from them. They're great for targets on the big charts, and same with the 1 minute chart. It's a paid version. So you can do Chart Prime Pro, 20% off is $67. It's even cheaper if you do it annually. But there is, guys, there's always the free version, right? And sometimes it's you get what you pay for. But there is a free version algo alpha, supply and demand, that you can just look for and put them on. On the 15-minute chart, they're pretty good. On the smaller chart, they're not as accurate. For me personally, it's worth the investment for Chart Prime. So what happens is when you purchase it, Jerry, and you go to your indicators, invite only, it'll show up. And then to put it on your chart, you just click it. And there that is right there. So that's all it is. Once you purchase it, it becomes available in your indicators. And then once you click on it in your indicators, it shows up on your workspace. I have the Market Dynamics. Let me see. Market Oracle Pro. So this is one and that is one. So it comes with a couple of them. That's a money flow and the supply and demand. So let me give you this one. So when you get chart, and let's click on it and see if we can find. So Chart Prime Pro, there's your yearly. It goes down to 40 a month. You can try it risk-free for 7 days. So let me give you guys that link. So you can put these on there for 7 days too and start playing around with it. And I've got the Oracle and the Dynamics. I do have, so all of this comes with it. Oracle oscillators. I don't use the oscillators, but I've got under invite only. Like there's the oscillator. I don't use that. I don't have any idea how to use an oscillator. What else is on there? Prime Screener. I'm not sure what that does. Strategy Builder. So you could even build a strategy, I suppose. There's your report. So there's a lot of tools that you can use. There's more than just the zones. We're just using the zones. And you can see how support holds right at 1-to-1s, creates a big ugly bounce. Don't trade in determination conditions. Pretty awesome. So the zones are the one thing that aren't included. Oh, thank you for that, Cam. I was getting to that one. Cam's amazing. Cam's going to throw a little support in here as well. So Steve, like any prop firms, so when we open an evaluation funding account, what triggers a reset? Breaking the rules, hitting your stop loss. That's what triggers the reset. And a test reset is $99 a month. And the one thing, Steve, that John Novak has done, because he loves you guys, is I want to see something real quick. So if you're doing 249 times 80, 199. So you're looking at a $50,000 account, about 50 bucks. So Steve, if you have a bad day, right, emotional day, you go drinking for breakfast and you blow it out, just cancel it and buy a new account. It's half the price of a reset. That's an old trick that I've learned in other prop firms. Sometimes it's easier just to cancel and get a new account instead of paying the 100. So I hope John's going to be like, what the hell? But I think that's important to say. But if you go through, Steve, so there's the evaluations. And then everything's in here. There's your evaluation rules. And guys, I encourage you to become familiar with the rules. Don't just go, oh yeah, Mark said go. Oh, last time before she's 16. That's awesome. It's a bittersweet day, Trina. It's a bittersweet day because I remember when my kid did it. I didn't have to drive him to wrestling anymore, and it was amazing. There's nothing on there about resets, Steve? Evaluation rules. Five contracts. See, and this is something. So there's rules that would disqualify you. Account types. Those are the different types. Drawdowns, markets, commissions. There we go. There's a whole section. A whole section dedicated to account reset, Steve. I knew it was there. It was snake, it would have bit us, right? So there you go. As long as the 80% is there, it will be. So there you go, Steve. I knew we'd get there. And guys, remember, I'm learning. I'm still going through, and I don't have that muscle memory for the quick hits on it yet. But there's the link to it. And then those are your two workspaces, guys. It's going to use triggers, but not the money flow. Medium 7 close, local. Market Dynamics Pro is what it's called, Jerry. Market Dynamics Pro. Chart Prime. Market Dynamics Pro. No worries. I appreciate you guys asking questions. I really do. Ask them all. There are no bad questions, guys. Morgan, strong top, odds favorable, potential to break, perfect entry. Great trade. Great trade. Morgan cranking out that NASDAQery. So Pete, this is your list. So watch this. I'll leave my market flow on, but you're going to go to indicators. And if you just click on the big box that says indicators, your market flow will show up under invite only. Making a lot of pictures. Right on, Morgan. You're developing a little extra patience. And then Pete, to get it on there, make sure that you're on your 1 minute chart and then just click that indicators. Go to invite only, and then all you have to do is click on market flow once. One thing though, Steve or Pete, so if I take market flow off and then I put market flow on, one of the things that's a little different is it'll start giving me these, but it has to go through and collect. So market flow starts at the point you add it, and you won't go back and you won't see those. You can't historically. So that's why I keep mine running. I'll open up in the morning and I'll just leave it running because market flow grows as the data comes in. And Jerry, did you get it on there? Did you find it? Uh-oh. I just accidentally closed up my Discord. Coming back to you guys. Coming back to you. Sorry about that. Awesome. Let me get my screen back up. Ah. Can you guys see my screen? Hmm. Uh, all right, there we go. There we go. I'm back. Are we good? Sorry about that, guys. Um, Give me a Y if you can hear me, please. Whew. A little nerve-wracking. Nobody? Okay, cool. Cool, cool, cool. So guys, let's go through and just, this is what your workspaces are going to look like. And you're going to be looking for the same stuff you pretty much look for on any other next-gen platform. It's the same things that we do all the time. If an area holds, don't trade into it. You'll be able to look for opportunities away from it. If an area holds, don't trade into it. You'll be able to find an opportunity trading away from it. So this is the S&P, guys, and I'm going to show you what we call an HVA trade. And I'm going to write the rules off. And it starts with your 15-minute, that's your big chart, zone reached. 59.70, 59.70. You guys, this is it. The zone has been reached. It bounced off the mid-band. It comes back up. Small triggers roll. Sell the HVA. This is the HVA trade. This is a high volume area trade. It's a trade that is designed to help you capitalize on tops and bottoms. I'm going to put that picture into here so that you guys can go back and study these. I'll be right there, Pete. And this is one of the things that I'm doing as well is, let me drop this trade journal in here, guys. This has pictures of the trades that we're about to talk about that you guys can take. On the plan, there's a high volume area trade. That's the one that we just looked at. When an area holds, it's an opportunity to trade from it using the market flow high volume area. There's a trend trade, which everybody's comfortable with. The idea that when a market is trending, buy or sell a mid-band. And then there's the one that I think everybody's really going to dig, and that's the momentum trade. When both charts have triggers screaming, Guys, on that 1 minute chart, you can use one-to-ones, you can use mid bands, you can use HVA areas to enter. So I'm going to show examples of all of them. Where do you go from here to get market flow? You don't from here. Oh, yes, you do. Go to invite only, Pete. Go to invite only. And then from invite only, and there's the picture. From indicators, you have to go to invite only, and then you'll see market flow in there. 10K, these have nothing to do with NinjaTrader. So the 15 and the 1 minute, all that is, guys, is it's your time frame for the chart. The large chart is a 15-minute chart, not a 13.2, because we're not using dynamic Renko bars. We're using, and then a 1 minute. Well, click on it. Jason gave them to you, right? You gave your trader view name to Jason so that he could activate them. Click on it. Mine has a lock on it too, doesn't it? Yeah, mine had a lock on it too. I have access to everything. And then 10K, the zones, mine are from a company called Chart Prime. Some of you, if you took the AL class, you can draw them in yourself if you want. I've got an automated version, and I use a company called Chart Prime. There it is. This is what John Novak's using in the other room as well. They offer a discount for an annual. John has probably tested 50 different supply into zones. This is the one that he came up with that he likes the most. Guys, if you're going to be a day trader for real for your life, it's a small expenditure. Chart Prime. It's the company that builds the zones, 10K. And they'll give you a 7-day free trial on those zones. If you don't want to spend money, that is your prerogative. There is a free version, dynamic supply and demand zones. Absolutely you do. It's a trading platform. There's the free version. So 10K, let me help you out here. Here's the instructions on everything from getting TradingView to getting to JSON to getting your Nexgen indicators. And since you own T3 software, you will get all of the indicators that John Novak has had programmed to look like Nexgen indicators for TradingView. But you'll go through and you'll sign up. Well, I'm logged in, so it's going to do it. You can get a free version of it for 30 days, and then Jerry was saying that if you do their 30-day free trial, they will offer you a 60% discount coming through. You'll be able to go through, you'll be able to sign up. This talks a lot about how to do charts and stuff, but what John has done for you guys is once you get at 10K and you send your TradingView username to Jason, he'll activate your indicators. So you'll send the TradingView. Here's all the instructions. You'll send him your TradingView support ticket. He'll give you the indicators. You'll be able to put them on there. And then he's also got workspaces for everybody. So he's already 10K. You said here? Okay. He's already done NASDAQ, ES, crude, gold. You'll find that once you have these, you could build anything you wanted. Because it'll just create a template for you. So that's the first step, is get it going, let Jason get those indicators on there for you. And then we'll go through the same. The reset, Steve, it's 80% off the cost. So 10K, let me know if you need help with that, but that link will get you 100% set up on the instructions so that you can get the TradingView account, so you can get the indicators from Jason. And then we're going to spend a little time, the last hour of every class, going through it. It's okay. Be redundant. So the cost of an evaluation count is separate from the reset. So Steve, you're getting 80% off the cost of an evaluation. The reset is what the cost of the reset is. $59, $79, $99. But I'm going to let you in on a secret. Don't tell John that I did this. Your cost on a $25,000 account is around 40, maybe 50. Hold on, let me see what the price is on that one. Cam put it in there for me. We're going to do math. We're going to do math. Whoops. I love these questions, Steve, because these are all answers that I need to get quicker at answering. So we'll get there. Yeah, no worries, 10K. You know I got you. I love working with you. So let me go to my calculator. And 149, oops, drunk fingers. 149 times 80%. My goodness. All right, I'm struggling here. 149 times 0.8 equals, you get a $17,000 discount apparently. Don't math me, 10K. If you know me, you know I don't math. So it's 30 bucks. All right. 30 bucks for the 25,000. So check it out, Steve. You're going to dig this. Your $25,000 with your discount is $30. 10K, what do you do for a living? I read indicators. I don't create them. Yo, 2711s, right on. I'm a tattoo artist. I draw on people. Actually, I'm an educator, but I draw on people front. I'm very right-brained, and when you start throwing percentages in, my brain hemorrhages a little bit. That's why I'm not a programmer. I can see the patterns, I just can't create them. So Steve, yeah, so your reset is $59. So it's $29 more to reset than it is to cancel and start over. Does that make sense? So it may be more cost effective. Yeah, John's going to be pissed. I'm not even going to put that in the room. I'm going to hide the evidence. But that's what you can do, Steve. And you guys, God bless you. Your clients. You've been with us. You purchased software. He's going to take care of you guys. Remember, Nexgen is a fraction that I won't be able to figure out of the 60 million TradingView users, guys. It's my hope that we catch at least 2 to 3% of that 60 million. I don't make recommendations, Jerry. I've never made recommendations. I'm not going to start today. So what I would say is look at it and make a decision. So your profit target is $12.50 on the 25,000. You can't lose more than $700 in a day. If you do, you disqualify. You can't lose more than $17.50 total. So are you comfortable with those numbers? If you're not, you can have a little bigger daily loss limit when you go a little higher. You can have a little bigger daily loss limit when you go higher. Your sweet spot is 50,000 trading 4 contracts. Perfect. And you guys will find it. You guys will find your groove. Jerry, some people keep doing this. They're like, well, I can trade 17 contracts. And then they blow out pretty quick because they do trade 17 contracts, right? John loves the bigger accounts. Nope. So the profit target, Steve, when you hit your profit target and you haven't violated and killed the account, you go to the next level. You beat the evaluation. And now you go into the next level where you'll pay your fee. And Jen, that's what you're talking about. Um, the cost associated, daily loss limit, maximum trailing, do not trade more than the allowed contracts. And then rules that will disqualify you. Hold on one second. Simulated is where everybody starts. And then when you pass it, you become a 1099 trader. You're still on simulator. Yep, you're good to go. You can see it formulating, Pete. Do you see it? There's your white bar. So it starts when you activate it. You're set, brother. All good. So once you pass it, Steve, you made 2750. You didn't hit your daily loss limit. You didn't hit your daily trailing. But you've got to do it. You've got to trade 5 days. So I don't want you to have one lucky day where you just stack the deck and jump in, jump out, make your money. That's not what we're looking for. We're not looking for lucky traders. We're not looking for windfall traders. I want to see 5 consistent days. I want to see that you can keep your poop in a group for 5 days, that you can get profitable, that you can prove you're profitable. And then you go to the next level. And the next level is the Sim Live Trader. And then when you're here, step 2 involves some pressure. The pressure sometimes gets in new traders. So what you're going to do here is you are going to be in a semi-live account. Steve, I don't know. That's a question for your CPA. That is your question for a CPA. You don't want me, the guy that couldn't do the 80% equation on a calculator, to give you tax advice. Sorry, Steve. And then, so profit targets aren't per day, Steve. That's your profit target for the account. You have to trade for 5 days. And then Jen, once you pass your evaluation, stop trading on it. Establish profitability. Don't hit the daily loss limit. Don't hit the daily drawdown. Don't trade more than a lot. I'm looking for your answer, Jen. I don't know about it off the top of my head. So I'm going to find your answer. So you're going to go through, you're going to sign your contract. I'm trying to find it. Billing, contracts, trading view tips. You guys know we have those? Thanks, Better Dad. And then, so Jen, let me reach out to the other room real quick and ask about that. Someone will jump in. I just did that. We'll get you, Jen. So Jerry, here it is. Once you're going and you get to the payout structure, depends on the account, right? So first, on a $25,000 account, you've got to take it up to 26,750. Then once you reach 26,750, you can take 1250 out every 8 trading days. That's 90%. And after your 16th payout, you keep everything. So it's different on what it is. Once the semi-live account, you can withdraw profits exceeding the plan's drawdown buffer. This drawdown buffer is used to pad the account, so the failing account becomes difficult. Failing becomes as difficult as possible. I need to double check that. It says 1250 every 8 days. 8 trading days before the first payouts requested. You can withdraw and Jerry, I need to get answers for that. Remember, guys, I'm on the teach you to read indicators side. I'm getting the people that have those answers. All right, and Jen, I've got your answer. And that's not a good link to it. There you go. There's your answer, Jerry. Hell no, make $1 million. Oh, and there you go, John. Thank you. Appreciate that. We want to make it with you. So, Jen, there's your answers on the activation fee. I'll make sure we put it in the documentation. Cool. Thanks, John. So, John, question with Jerry. He's asking, is $12.50 the most you can take out every 8 days? What if he makes 10 grand? So this is the max for 25K is $12.50, even if you have more than that in your account. Get the guru in here. Hopefully he comes back in. I'm going to get that answer for you. And I'll do it in the form of pictures over to them. That doesn't sound right, right? So let me get confirmation. And this is why we're here, guys. But this is why of course, Mark Dean just sends me a link. After the 16th payout, there's no limit on withdrawal. Thank you, Jen. Hey, guys, let me do this for you too. For you guys that are asking a lot of questions about all of the actual funding company stuff. Let me find where John did. There we go. There's John's. Nope, that's July 29th. Son of a gun, John. Making it hard on me. Oh, there it is. There we go. Guys, this is John Novak spending 2 hours in the room answering everybody's questions over the funding company. My apologies. I am not neck deep in the funding company as much as I am in the education. And then Jen, there's your activation fees. John just put the picture in there. It was in the documentation. How do you scroll right? Scroll right? What the hell does that mean? Scroll right. Oh, I see. That's got a scroll on it. There we go. There we go. Haha, that's kind of cool. Pretty tricky, Novak. I'm not smart enough for that. I wasn't ready for that one. That one threw me for a loop. But there you go, Jen. You've got your answers. And guys, I dropped the video in there. Yeah, I know, right, Jerry? There's a lot of answers that I don't have off the top of my head. There's Chris Novak put together the website. He knows where everything is. John has approved it. He knows where everything is. I've gone through it and I can find the basic answers. And I know a lot of them. But there are going to be things that I get stuck on. Now, if you want to talk about the trades, I got you on the trades. This is the one that I think everybody should take a look at because these are the rules that will disqualify a count, guys. Trading 1 minute before or after, red news. We talk about it every day. Don't trade beyond the market's close. Thanks, John. I appreciate you. No high frequency trading. The average of your trades that last 15 or fewer seconds would be considered high frequency. Sometimes you get stopped or the market jumps quickly to the target. So there may be trades here or there, but as an overall average, your trade should take longer than 15 seconds. One of my jobs is going to be to go through and I see a bunch of 8-second trades. I'll be doing that trade police. I actually get to become the trade police. What else do you guys have? I know we kind of... They're like, I don't want to ask Mark any more questions. He relies on John for everything. But we can find them together, guys. We can find those answers together. What I really want you to get, I'm going to give you guys, you have an FOMC question? FOMC is high impact news. Type your question in. Let me make sure. I won't presume to know what you're talking about. I'm going to give you guys the keys to the kingdom real quick. For everybody going over here, when the 1 minute triggers are strong, don't fight them. This isn't trading advice. This is the recipe for financial suicide. Better Dad, I don't have an opinion about how the market reacts during during the G7. One thing I can do is I can open up a chart and do that, and I can tell you that 6193 has been producing fights for a long time. Looks like there's breakouts and opportunities, but I wouldn't say that the market is screaming one way or the other, and I think that's true for most markets. Remember, guys, we trade a pattern. All we do is trade a pattern. News can disrupt a pattern. And guys, if the highest level financial people in the world are sitting in a room thinking about making decisions, it stands to reason, it stands to reason that I have drunk fingers again. That the markets may be a little indecisive, waiting for them to say something stupid. So I don't really have an opinion about it, but I can take a look at today's market and tell you that there's a lot of indecision, that there's a lot of fighting, that people are struggling to commit to a trend, to commit to a direction. And I think it's absolutely brilliant that they're dissecting a key Fibonacci area to do it. So, I mean, we're just watching the fight better, Dad. Remember, 90% of your day. 90% of your day. Most of us break rules and overtrade, so the 90% doesn't seem real. But if I do 6 hours, 360 minutes times 5 days, guys, 1,800 minutes, 10% of that is 3 hours over the course of the week. And I still think that's high. That's a lot. And that's what it is, Better Dad. And some days the rules, have you guys been in the market and you're like, holy crap, it's like an ATM machine. I keep getting setups. I keep getting entries. I keep hitting profits. And this thing just keeps running. Guys, I've had those days where you wake up and you're like, I'm going to I'm going to have a day. And then 3 grand later, you're like, gosh, that was amazing. And then some days you're like, this is ridiculous. I can't get a trade to save my life. I can't piece 3 advantages together to get me where I need to be. And that's kind of part of trading. That's what trading is. There's going to be days where you make a lot of money. There's going to be days where it's hard to make money. There's going to be days where you lose money. And it's one of the reasons why we don't base our lives on one day. Absolutely, I will, Jerry. Does that make sense better, Dad? Like, I'm waiting for the patterns, and sometimes they just don't show. And I think that this G7 summit, if you ask me that same question next time, better Dad, I'm going to remember this conversation, and I'll probably tell whoever asked the question, man, I remember last time. It's kind of like when there's OPEC meetings. At first, I didn't know what to expect. And then everybody in the room blew out their oil accounts because it was high impact all day long. So now if you asked me, what do you expect during OPEC meetings? I would say I expect it to be batshit crazy. Respect the red news. All right. And then Jerry, you have the plan, right? You do have the trading plan. I just want to make sure. Okay, cool. Um, and I'm putting that in the room so you guys can see that there are checklists for each of the trades, guys. So let's go through and let's look at a live market. That's more fun. And Jerry, well, probably not going to see any today because let's be honest, there hasn't been a trend today. It's been sideways. I want to see what this looks like on the large chart. That is Tuesday at 10:30 a.m. You just can't even see it. So that's about right here. Nope, there it is. 10 a.m., 10 a.m. Boom. So this is where we're at right here. I just want to make sure I get you. There we go. That showed up on the other one. Just for reference there. Yeah, better dad, absolutely. Today's a good day to go, I don't know, go work on your swing. Go bowling with the kids. Well, the kid has a fever. Curl up on the couch, watch you some Scooby-Doo. Some days it's just better. All right, so Jerry, the premise for the trend trade, very much like any other trade, is that you've got a large chart that says down. You've got a large chart that is showing you momentum. You've got a large chart that's pushing down or up. And then the trend trade is exactly what it sounds like. It's a pullback to a mid-band. And the difference between, I want to do this. So the difference between, we're going to try to make it just a little more clear. There we go. That looks like a good one. So Jerry, strong triggers down. Always a plus, at least trading with the trend, because how can you have a trend trade if you don't have a trend? And then this is what your entry is going to look like. So the first rule, no large chart zones reached. And then you're pretty much done with the large chart. And over here, small chart, no zones reached. And you're going to sell a pullback at a mid-band with a close on the correct side of the fast triggers. So where on NinjaTrader, Jerry, you're used to getting in at an area inside of triggers, we're not doing that here. What we're doing here is we're finding our midband, and it's literally, I see it coming, not yet. I see it coming, not yet. I see it coming, not yet. And then you get that close below the fast triggers, go. And then that's your trend trade as you go down. And then once that bar closes, I'm putting my stop above that bar. That's my deciding factor. And what you're going to find on the 1 minute is that you have an awful lot of trades with less risk going into them. But it's the same concept. It's that momentum. It is nothing in the way. And then just look for that mid band. And there's just a little patience piece there where you're not fighting those fast triggers. And nope, close on the correct side, Jerry. So one thing you want to do, don't make up rules. It's a close on the correct side of the small triggers. I don't care what color the bar is. If it closes on the correct side of those triggers, that's my trade. And we'll see if we can just find another mid-band look. And here's a good example. Pulls back to the mid-band. You don't want to fight those. Me? Absolutely not, Steve. I wouldn't feel crippled at all only trading television, TV. Not even a little bit. To be honest with you, I'll probably make the transition completely away from NinjaTrader eventually in my own trading. This is crude oil. It's hard to find trend trades in a market that hasn't been trending. So let's do this. Let's look at some trend trades. Have you gone through these files yet in here, Jerry? Of course, Better Dad. My morning is going to be spent every morning teaching you guys. I am 100% Nexgen education. That's my commitment. My afternoons are going to be spent working in the funding company, probably. Right now, as you guys transition, I want to make myself available. I want to run late and let you ask all the questions. And there it is right there. Buy or sell a close on the correct side. And that's what gets you in. That's rule number 3 for the trend trade. And Jerry, these are all in that spreadsheet. But this is a good one just to help you kind of get the visual. And you can see 1 minute, 2 minutes, 3 minutes, 4 minutes. It's really 5 minutes almost from the time you hit the mid band until the time you're getting in. These 1 minute charts, I think, create amazing patience. Because these fast triggers, guys, I refuse to fight them. And if you do that, if you commit to not fighting these triggers, you'll be amazed at how effortless it becomes. That's not right. So everything says up, screaming, comes back to the mid band, and there's your close that finally gets above. There's the mid band. And then it finally goes up from there. And it dances forever. But you end up getting there. And you see that a lot. As you get closer, you'll see the bar positions, Jerry. You go from outside to inside to close on the right side. And that's exactly what it's going to look like for you. Does that make sense? Yeah, I'm still recording, Steve. I'm still recording. And this one's labeled no entry. And this is going to happen every now and then, Jerry. You get to the mid band, the small triggers are coming down, and it's just going to run without you, and you're going to have to make the decision on what you want to do with it. I called that one not my money. It was a good-looking trend trade, just didn't give me an entry. And then this says holding trend trade, and this shows it on using NinjaTrader, that's where I was in the trade from. But Jerry, do you see how this is your trend trade? Close below. And then look at your large chart. Your large chart is down and clear all the way. And you'll develop some trust when everything is screaming down, and you'll be able to start holding these trades because this 15-minute chart, when it's railing in a direction with nothing in the way, I find myself taking bigger trades. Using 1-minute pivots for stop placement on the way down, and I'm trying to take a lot of pictures of those as well. But it all starts with entry, right? Great entries create manageable trades. Coming off the termination, triggers roll. There's your close above, and off it goes. There's your high volume area trade before the trend trade. Termination, triggers roll. There's your pullback to the HVA. If you didn't catch it, it comes up, turns into a trend trade, and then off it goes. The green color on the 15, just a bad shade. Watch this. The background, Jerry, is that what's getting you? So if you go to your indicators and you go to the trigger lines and go to settings, background above large triggers. So you can go bright green, you can go really dark green, hell, you can make it yellow. Pick whatever you want. Blue's pretty, right? Little hot pink going back to the 80s. So you can do whatever you want. You can make that any color that appeals to your eyes, or you could go through and you could make everything. And this is one of the things that I've done is I love that look because I know which side of my trigger's on. I love a gray chart. Gray charts make me happy because the less that I'm looking at, I can see where price is. I can see where my triggers are. I know I'm coming off of a zone. I don't need a background color to give me that. The background colors were put in because that's what Nexgen users are comfortable with. And some people have trouble defining a trend, and that helps a little bit on the trend. When the 15-minute color is red and you go long on the 1 minute, so like that last picture, hold on, let me bring that last one up. Yep. So let's look at everything that happened though. At the time of the entry, my 15-minute is coming off of a termination condition. My 15-minute triggers have rolled. I'm above the mid band. This is a trend trade on the 15-minute, Jerry. Do you see it? Pulls back to the mid band, closes on the correct side. That's a trend trade. This is a smaller, faster chart showing you the movement inside of this big chart. So you're going to have to lose the accepted norm for what you've been looking at NinjaTrader, that the colors are always going to match. They're not. They're not always going to match. It takes a long time for that 15-minute to show some change. It may take, because, I mean, it started down here, and it didn't get a red bar until all the way over here because there's a 15-minute lag in between bars. Yeah, I know, Jerry. Trust me, for me too, it happened. And I think that what's made it a pretty easy transition for me is I love checklists. I love saying, did I have this? Okay, let me look for that. I'm a big fan of flowcharts. I'm a big fan of if-then. And that's exactly what the trend trade plan is. It is if-then. If my 15 minutes not trading into something, notice it doesn't mention color or even trigger strength really. And my 1 minute's not trading directly into 3 divergences or against a zone, buy or sell a close on the correct side of the triggers. So what it does is it takes the burden of the huge read off of us and just gives us 3 simple things to look for. I'm not trading into a zone. I'm not trading into a zone. I get a close on the correct side of the triggers at the midband. And honestly, Jerry, you know how I try to teach the high probability trend trade real simple every day? Making it easy. Have to be colorblind. Yeah. But none of the rules, Jerry, that I've ever taught in my life have said the color has to be this. The only time I really talk about color is for trend to have strong triggers. That's it. Because the only way that you can ever have strong triggers on that Ninja Trader is if the colors match, the colors for the background and everything. Hey, Better Dad, have a good one. Are you going to focus mainly on trend trades? Jerry, is that your plan? No zones reached. Pull back to the midband. Waiting for the close on the correct side. So here's a good example of how you're waiting. That's what it's going to look like as you come into it. And I've tried to take a lot of these pictures, and I'm going to keep taking a lot more, Jerry. But you see how I didn't reach the zone. I'm not trading into a zone, and I'm waiting for the close. It's that little patience piece. This one actually says, be patient for the entry. Trying to figure out what I did here. Okay, this was a short. So this is all green. Don't panic, right? Not trading into a zone below me. There's my midband. Don't go, don't go, don't go, don't go. Oh, there it is. Boom, it finally went. And this one went down and hit it. Don't fight those small triggers. So, Jerry, you're going to have to learn a little patience because you're used to getting in with a limit order at the area. But instead, you're going to wait for that close on the other side. That's the one that's going to pay dividends for you. And then that's the one we just looked at. So you can go back and find a time when the market's trending. Today is not that day. This is not a trendy day. And you can see how it's dissecting. And there's areas on both sides were consolidated. So it's not a trend trade day. And when it's not a trend trade day, you're going to have to look for other opportunities. Whether it is coming off of the bottom of the zone using an HVA, whether it is odds favorable momentum, using a pullback to the zone as a momentum trade. And I think one of the things, it's a drag ass day, yeah it is, David. I think one of the things that the 1 minute does for you, especially with these zones, is it gives the opportunity to find the move within the move. And that's what the HVA, that's what the momentum trade does. When these triggers are screaming and it breaks and pulls back to a zone, I sell the zone to get to the next area. And when these triggers are screaming and it breaks the zone and pulls back to it, I buy the zone and take it to the next area. And I love that momentum look. Love that momentum look. There it is again. It breaks through, pulls right back to the HVA line, and down it goes. Everything is up, strong, breaks through, pulls back, goes. The zone look is cool. I dig it. And man, it's just get on that paper trading. And Jerry, get into the habit right now as you learn these. Take pictures, annotate them a little bit, but bring them into the room for me. Let's look at them together. Help me fill my spreadsheet, guys. I'd appreciate it. Awesome. What else can I do for you guys today? How are we feeling? A little more clarity each and every day, I hope. Let me